All right, guys. Good morning. Let me know if you can hear me. You should be hearing me pretty well. I am almost here. Let me get everything set up, and you'll see. All right. I'm wondering where I am. Like, I'm putting the video capture up. Maybe I gotta delete this and reinstate it. Hold on. I'm on my laptop, but we are here today. We gotta work it. Let me know how the speed is. We should be pretty good. I checked. I did a couple speed tests just to test this. It was pretty solid. Let me know how the mic is coming in. I also got to make sure I get my Bluetooth, my AirPods connected. But give me 1 second. We're here. There we go. Okay, we got that up. Let me log into TOS and Top Step X, and we should be pretty good. NASDAQ still sitting just under 23,000. I think, we made a push towards 23K yesterday. Couldn't quite break it on the NQ, but we're getting pretty close to it now. So let me put this up on screen and make sure you guys can see it. You should be able to see it pretty smooth here. There we go. And then we'll put some stock charts up to take a look at stocks. There we go. We're in there. No music yet. I also haven't really checked the stream yet. Hold on 1 second. There we go. What's up, Ty, Faye, Joseph, Magic? We have audio. Video is good. We can hear. Sound is good. Yeah, I'm sorry, guys. I'm traveling right now. Honestly, dude, for whatever reason, like, this mic turns on. But, like, anytime I try to use a streaming system, it never checks the, never mind. It's hard to explain. Like, it never picks up this mic that I got bought on this camera. I'm going to have to get, like, a Bluetooth mic or something. But it's okay. It's all right. It seems to be, like, at least the mic is working. You know, I don't know what it's hooked up to, but it's working. Let me get my Bluetooth set up, and then we're good to go. We got Jerome Powell today, chat. So that's a pretty big event. But yeah, the big story is gonna be. Let me add this Bluetooth. The big story is gonna be Jerome Powell, and then we also have the JOLTS job report at 10 o'clock. Very big, very important. Okay, we're in there with these. Yeah, so let me get some music playing here. This is my first time at this place on this laptop, so. But we should be pretty smooth here. It's honestly probably going to be easier for me to stream here than it was for me to stream when I was at the beach a couple weeks ago. Let me know if the music's in. It should be pretty good, I think. Look at the NASDAQ rip. Now we just got to get TOS up. Let me know if this sound good. We should be pretty clean. All right, good. Yeah, JOLTS job report's massive today. It's massive. We're gonna get stock charts coming up soon. Oh, it's really nice to have this monitor. Honestly, we've been sideways since like 1 a.m. I actually got some coffee this morning. Yeah, I'm in Michigan right now. Michigan's so nice, bro. It really is so nice, dude. Yeah, I'm gonna look at Tesla. I'm stalling some updates real quick. Let's talk about some news, though, shall we? All right, so most stuff's looking slightly down from where it was yesterday. You can kind of see where the day started here. We're slightly down, not a huge amount, but potential cool down after yesterday. We didn't quite break 23K on the NQ. Tesla under pressure, it seems. There we go. We're gonna log in right now. Do I have my phone? Yeah. All right. Let's pull some stock charts up. Yeah, and I figured out. So yesterday, remember yesterday's internet issues? That was specifically my internet service provider back home. So my internet service provider back home wasn't very good. And we got Jerome Powell speaking right at the opening bell today. Very strange, very strange. But whoa. I'll pull this up here. And then we'll pull this up here. This should be pretty clean, pretty smooth. Whoa. It's kind of jumping around, but that's alright. It's probably just the second monitor that I got plugged in. Look at Apple. Apple at 2 of 650s. So Apple's pushing up a little bit this morning. Let me get out of the way. And then we'll move this here. We'll pull this here. But look at Apple. Nvidia down to 156. Still pretty up there, though. I mean, 160s. Pretty good for Nvidia. All right, so Treasury Secretary Bessent says they are moving toward a vote today on the big, beautiful bill, according to Fox News. So again, Treasury Secretary Bessent put out this news earlier today. That news just dropped. I got you. Let me pull some stuff up. So shares are down in Tesla around 6% if we take a look at this. Down to 300. This was at 330 just a few days ago. If we put up a 15-minute chart, look at Tesla. It was at 360s all the way down to 300s right now. This follows reports of the president threatened to revoke federal subsidies from his companies and weaker Q2 sales in Sweden and Denmark. We also should be getting Tesla delivery numbers soon. I want to say they could be coming out today, but they might be coming out tomorrow or the next day. Okay, so most people think the Tesla delivery numbers are going to come out Wednesday, July 2nd, tomorrow. Tesla, though, typically releases these a few days after the end of the quarter. Their earnings call is going to be July 22nd. So, yeah, they're thinking tomorrow, Wednesday. It usually drops around 9 a.m. for Tesla deliveries, and we're going to cover those here as we always do. So, yeah. Yeah, today we got Jolts, services, or I think it's services. I'll have to go back and look. Let me fix this here. I think it's probably going to be better to just do it like this. Yeah, do y'all think Tesla's deliveries are going to come in good or bad? I mean, you never really know what these type of things are going to show up as, but yeah, worth watching for sure. There we go. Give you guys a little bit better chart here. We gotta reduce the volume, but yeah, Tesla down after President threatened to revoke federal subsidies from Elon's companies. Nvidia inching towards higher, so setting a new all-time high yesterday. Nvidia is showing slight gains this morning. I don't know, I'm showing Nvidia slightly down this morning. Did it break all-time highs yesterday? Yeah, 159, just under 160. I think it wants 160s too. I think 160 is a nice whole dollar level, but it's at 159 right now. Let me make these a little bit bigger here. Palantir up after the company announced a strategic partnership with Accenture Federal Service to provide AI capabilities to federal agents. Juniper climbing up in pre-market. Apple. Yeah, remember, Thursday we have the non-farm payroll report as well. So there's a focus on prioritizing narrow deals over comprehensive packs as the deadline approaches. So remember, the trade deadline is in a little bit over a week. July 9th is when the deadline is. It's a little bit over a week. It's getting closer. Canada is dropping digital services tax as well. Canada is reportedly dropping its digital services tax, which had caused the president to terminate trade talks and threaten higher tariffs. So that's going on. But the European Union is also confident of a deal before July 9th. France is reportedly confident that the European Union can reach a trade deal with the U.S. before the 9th deadline to prevent new tariffs. China delays. So China's country-specific reciprocal tariff rate has been suspended until August 12th. And country-specific reciprocal tariff rates for most countries, excluding China, are suspended until July 9th. So most countries' deadline for country-specific reciprocals are July 9th, but China has a extension or suspension of it until August 12th. The market is also watching the big beautiful bill. It's a bipartisan vote eliminated the ban on state-level AI regulations, which could be a major setback for tech firms. Crude oil have been pushing. Let's take a look at crude. So Tesla down. Crude is still sitting right where it was. $65 a barrel. It originally spiked, like it's been moving some. So crude opened up. Did it really open up this high? Is this right? No. Okay. This is a daily 4-hour chart. Okay. Alright, I was about to say, this is from the conflict. Yeah, so oil hasn't moved since last week. So oil's pretty flat. Reports indicate NVIDIA executives have offloaded over $1 billion in shares during the company's AI-driven surge. That news is going on. Yeah, J Powell speaking at 9:30. Yeah, Powell speaks today. Let me put some banners up here. Let me fix some of the. I need a background. I don't know why it's opaque. No, I don't want the colors to be opaque. There we go. I like this better. There we go. It's not bad for a travel setup, right? How's the audio? That's what I want to know. How's the audio? Yeah, I don't see anything labeled that V. It might be the red circle. Tesla down to 220 by next Friday. Here, let's do a poll. With the JOLTS report and Jerome Powell, will the market rebound this morning or continue its small pullback? Or let's do this better. Will the market break highs today or pull back? All right, we're gonna give 3 options: highs, pullback, and I don't know. There you go. It's cleaner audio, is it really? Yeah, I mean, smart money tracking. I thought you were Ernest. Y'all remember Ernest? Ernest Scared Stupid scared the crap out of me as a kid. If you're old enough to remember Ernest, you know. But when I looked at your, I don't know why I thought you were Ernest. I might call you Ernest just because you know. Rest in peace. Who is Ernest? I'm English. Oh, he's a legend in America. He passed away. The actor. It's a series for kids. Watch Ernest Scared Stupid. You'll get scared. Good movie to watch with your kids though. It's really good. Genuinely good. Yeah. Hey, what's up, James? I think it breaks highs but closes red. I mean, that's very possible. Yeah, I was kind of being sarcastic with the legend, but he's kind of a legend. All right, so look, here's oil. Where's AMD at right now? AMD up to 140s. Not at 150s anymore. Okay, Palantir down to 130s. All right. So he was a good-looking guy. Well, Google him. Speak on Tesla. I did. So Tesla down. We're at 300s right now. Look at this. We're down from 359 to 300s. Y'all do me a favor. Hit the like button. Hit the subscribe button. We got some votes on our poll. 34% think we break highs again today. 51% think we pull back. 15 honest folks said they don't know. Let me make sure we're monetized. I'm pretty sure. Okay, yeah, we're monetized. Okay, good. Yeah, we're in there. I think it was the hat that made me think you were Ernest. Market seems like it's going to be bad overall, except maybe Apple. Yeah, Apple was running up this morning. Apple up to 206, and Apple's been right around $200 for days. So Apple hadn't really moved. Here, sorry, it might kind of glitch the screen a little bit, yeah. But that's all right. Let me. There we go. All right, so the China foreign minister says China and the European Union should enhance communication, understanding, and consolidate mutual trust. Let me see if it lets me exit this. Exit. Oh, well. So Vertex Pharmaceuticals, VRTX, announces European Commission approval of Aliftrek, a new once-daily CFTR modulator for the treatment of cystic fibrosis. Bro, I'm telling you, I hate the airport, dude. I genuinely dislike the airport. It feels like no matter where we go, we're missing something. Pee Wee Herman was legendary, bro. Alright, so the NASDAQ is down. We might take some trades here. But again, airline stocks running into, are they down? You always got to double check what AI says here. Market's watching the big, beautiful bill. That's one of the big things. And again, everybody's kind of paying attention to July 9th. Yeah, so today we got the JOLTS report live at 10 o'clock. It's expected at 7.3 mil. 7.3 million. I think he's speaking with the ECB. Jerome Powell is. Yeah, Jerome Powell's doing a policy panel discussion with the European Central Bank. Okay. Yeah, I'm trying to put this up so you guys can actually see. The only thing I can think of to do is a scroller, though, but it's alright. See, we're so flat, though. I don't know what I want to do here. I guess we could just do it like this. There you go. Alright, so I tried to put it on the screen to show you guys what's going on with everything. Top 3 complainer of airports, definitely top 3. NASDAQ on the daily chart looks super stretched. Yeah, I mean, the NASDAQ is essentially rebounded all the way back up. Like, let me get rid of some of these charts. You know, we had all the tariff stuff go on. You know what I mean? Like, we had the tariff news and all that stuff. I missed my Epic pin. And so that just dumped the market down like this. Like, we just had these big pullbacks, these big drops. Everybody freaked out. Tariffs, drama ensued. And then market just got bought back up. But this is my point, is that generally speaking, the biggest statistical edge, and I say this once, I'll say it again, but generally speaking, the biggest statistical edge is that the market's going to go up over time. That's just what happens. Like, the market's just going to go up over time. Now, it might drop, it might crash in between that, it might pull back big percentages. People might lose 20, 30% some years or whatever it is. But generally, the people who lose the most in those situations are people who get emotional and sell. And the people who do the best in those situations are people that buy up the dips. That's generally the best move. That's the best way to do it. But again, I can't guarantee anything. I'm certainly not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade smart. I can't guarantee anything. Understand CFTC 4.41 and all that good stuff, but still, that's what it is. Yeah. Oh. Take advantage of all the emotional dips. Yeah, I mean, that's possible for sure. I mean, I think that's probably one of the better moves. Yeah, and so one of the things that we got going on is we're going to have Jerome Powell speaking. And then we're also going to have the JOLTS report come out at 10, ISM manufacturing come out at 10. And so what I'm probably going to do is I'm going to cover Jerome Powell's speech. But I'm also going to report this when it drops. You know, we're going to do our best to cover both. The JOLTS might move markets while Jerome Powell's speaking. So we got a really interesting day today because the JOLTS report comes out while Jerome Powell's speaking. You know, same thing with ISM manufacturing PMI and regular manufacturing PMI today. We also have construction spending. And so it's not a small day. We got a whole bunch of stuff going on. It's a shortened week. Remember, the market's closed for July 4th. And so the market's going to be closed Friday. And so just understand, like, markets are closed Friday. We got the big labor report Thursday. And yeah. And it closes early at 1 p.m. Eastern time on Thursday. I'm actually in Eastern time right now, which is cool. I got to get up. It's almost 8 o'clock my time. I'm in the middle of nowhere in Michigan right now. I need to get a haircut. The last time I went out to get a haircut here, the guy gave me a bowl cut. And he gave my son a bowl cut. I didn't even ask for a bowl cut. This was like, this dude must have been like 80. His hands were shaking. I was nice to him anyway. But I'm not trying that again. I think I'm just going to let my hair grow while we're here. Lesson learned, you know. Yeah, I mean, honestly, this dip was a beautiful dip to buy up. I'm trying to look for some trades to get involved with too here. We got a little breakdown here. Let me document some levels on the NASDAQ. I'm definitely watching this isolated level right here. I'll call it 15, like this. It's just right there at the bottom. It's like the low of the day, isn't it? Let's see. Yeah. We got some whole dollar levels. We got like 850 right here. We're definitely watching 850. We got 800s underneath us. I'm definitely watching like 3,000 up here. I think 3,000 is an interesting level right here. And then 22.9 right here. If anybody watched that video I put out on levels, you can kind of understand what I'm doing right now. The only other one, maybe we got like this isolated here, which also confirms. So we'll put that one on the chart too, just because it's way up there. All right, so these are the levels we're paying attention to. We also might have like 25 right here as a level. We'll put 25 on this level right here. We might bounce right off at 25, but that's what I'm looking at right now. I'm going to put this in sub-only mode. I'm going to make sure it is. I don't know if it is or not, but I'm going to put it in sub-only mode. So I appreciate you guys. We are in sub-only mode right now. Haven't paid for a haircut in 15 plus years. One pair of clippers, let it grow, shave it off, repeat. Yeah. Markets don't always go up, especially in the short term. Man, I didn't get enough sleep last night. No, you're right, John. So yeah, markets don't always go up short term. You never know what they're going to do short term. They could do anything short term, right? This is one of the things, like, I don't claim to be a market expert here. I just try to help traders, and I try to help people that don't understand the market understand it. Like, the market is over decades, the market's going up. And if you get too bearish, if you get, you know, you got a select group of people that for whatever reason, maybe they distrust whomever, you know. They think the market's going down long term. And again, I've said it once, I'll say it again. That's the biggest sucker bet in history, right? Short term, you don't know what's going to happen. Market could crash tomorrow. But if you DCA and you have enough money on standby to DCA into those situations, that's generally going to protect you regardless, right? And so as long as you're smart with your money and you just kind of wait for opportune times, it's kind of like buying, it's kind of like getting loans, right? It's not always the ideal time to get a loan. And sometimes you either got to refinance or you got to wait. Same thing with the stock market. It's not always the best time. But if you DCA, it's fine. If you have enough money, at least. Or if you or if you just wait for the right time. You know, generally speaking, at least once a year, the market drops by 10+%. And so, and again, I'll say this once, I'll say it again. I say generally, I'll say this. I say generally the market goes up. And you always got somebody who's like, well, nah, what happened in June? Generally is the key word there. Like, on average, the market's going to go up over time. It doesn't mean it's never going down. You know, there's always outliers. And so, all right, look at this drop in markets. It looks like some news might have just come out. Hold on, let me make sure. Because we got some drops in markets right now. So the president says Elon Musk is upset he lost the EV mandate, but he could lose a lot more than that. Let's see if this is widely affecting Tesla here. Yeah, so you can see Tesla drop right now. Tesla's been falling down. It's at $300 a share. But the president says on the tax bill, I don't like cuts. He says Elon Musk is upset he lost the EV mandate, but he could lose a lot more than that. So that news is affecting markets in some way, I think. All right, look at that big drop in markets right now, chat. We're breaking down here. I'm going to look to see if we can, like, attack something. We're right at that 815 level. Yeah, I'm trying to check X right now. Feels really good to have a mouse. This is something I did have. So look at this bounce. So we didn't really bottom at this 815 level, but we did find at least a little bit of support there. So the president asked about deporting Elon Musk. He said, I'll have to take a look, end quote. Yikes. So the battle is on again, man. All right, so look at us pop right back up here. So Elon Musk has been a vocal critic of the president's major tax and spending and calling his tax bill utterly insane and destructive and warning of the biggest debt increases in history. He's even threatened to support primary challenges against the Repubs who voted for it and has floated the idea of forming a new political party. The president's response to the criticisms, he's publicly suggested that his Doge department, which Musk previously co-led, should review all federal subsidies received by Elon's companies. The president also stated Elon may get more subsidy than any human being in history by far, and without subsidies he would have to close up shop and head back home. He resorted, I am literally saying, cut it all now. This comes of a period after the relationship seemed to get better and they apologized on social media. Yeah, and look at the market, bro. Look at this. We're at 22,830 right now. Where's gold at? Let's take a look. Tesla just went under 300 for a little while. Here's gold right here on the bottom right. Gold's pumping. It's at 3360s. So gold, look at this V-shaped recovery for gold in the wake of everything going on. I kind of want to short this right now though. You know what? We're gonna try. I'm going to short one micro contract. We're right at the 200 EMA. I think we got Powell speaking. We got Jolts today, so we might have some chop. All right, we're slightly green. There we go. We're going to take a piece of that off. Just lock it in. Maybe hold the rest break even here. There we go. I'm gonna cut it right there just because we got like so much green so quickly here. Should probably take a little bit larger size, but that 200 exponential, you want to know why we watch this 200 EMA. Look at where we reject, literally right there. I might short another little pop here. Here's 825. I'm gonna buy this now, right at this level, see if we get a little retracement pop. It's a little bit riskier, but that's okay. We're flat. I feel like I should maybe reduce my size a little bit here, though. What a weird price action. I gotta watch the breaking news too. I don't want to get stuck too deep in this. Alright, I'm gonna take some of my size off here just because I can. And then we'll leave this last little bit. See if we rebounce back up there. Alright, so the president says he will discuss the overseas conflict with the Israel prime minister as well. There we go. We'll hold the rest break even here. I want to give it time, but I'm going to hold this break even. It could fall down, but we bounce right there at that 825 level. So, alright, we'll cut it. Alright, we're basically a break even trade. Is the stream choppy right now, chat? Is it really? Are we lagging? We should be lagging. We're not showing. We're running at 45 kbps on my end, which seems to be pretty solid. We exit out of some of these sources. We seem to be doing pretty good right now. Stream is smooth. Okay, cool. Cool. This one was Gaza, Sam. Yeah, it could be you. It's all good, brother. I should have held that long. You see how the market can kind of respect my levels here, even if it breaks over or under them. They're not going to be perfect, but you can find these little bottoms like this just by looking at the milestone areas. I'm going to buy this again, I think. See if we can add back down here. That's what I want to do. Yeah, I can put a timer up too. Would you guys like a timer? Let me make sure the timer works here. Yeah. Alright, so it is 8:05 market time. Hey, there we go. Take that off. I gotta stop using. So we are long. So I should be able to join the ask and get out on the ask now. Buy into this some more here too. 3. I just want to see if we move back up to retest that 200 exponential. It doesn't matter too much. It's all pretty small. The range is very small on the day as well. Gold's pushing up, Nvidia's dipping down, but yeah, we got Powell speaking. It is 8:05. We got Powell speaking in about an hour, and what, 23 and a half minutes? Yeah. Okay. We got 2 contracts we're going to try to hold break even. Let's see. We're getting ourselves in a good position. The market's just been choppy. Like the last 5 minutes has been choppy. If we can get ourselves into a position where we can hold it close to break even and let it run, that's great. But yeah, market's just been chopping back and forth. Alright, so we got this timer up. Pull that here. There we go. That's actually a pretty good timer right there, huh? Yeah, I don't know why he's speaking at market open. I really don't know why. He's decided to speak today right at live at the opening bell. No idea. It's with the European Central Bank, is what it is. Yeah, we're gonna cover Jerome Powell on stream. All right, so look at the Nasdaq fall here. Let's see if there's any catalyst for this. So the president, we got the check balance. Yeah, so Treasury Secretary Bessent said earlier he admires Elon on rockets, but I'll take care of finances. He said the tax bill more than pays for itself, end quote. I brought another camera with me, but it's okay. All right, so look at this flush. Yeah, look at the Nasdaq come down. So let's watch 22.8s here. 22.8s. Definitely a lot of momentum. It has to be catalyst related though, based off of how fast we're moving, I would assume. All right, so the president said Elon Musk could lose a lot more than the EV mandate. AMC issued a press release with a major announcement that is one of the more important developments in their multi-year effort to fight back from 2020. They said they signed a collaborative agreement with some of our most key lenders to bring more than $220 million into the company's treasury through the issuance of new debt, which can be used to refinance 2026 debt principal repayment, convert $143 million of debt into equity, and fully resolve the litigation from some of the holders. Yeah, I mean, AMC, I don't even know if anybody's paying attention to that anymore. Yeah. Yeah, I'm looking to see if we got any breaking news. I don't really see any. Nothing, you know. So the president had some remarks at the White House. All right, look at 22.8 right here. Let's see if 22.8 holds. All right, look at this breakdown here. So we're under 22.8, but we are starting to rebound back up here. Look at the Nasdaq flush. And then we're bouncing. Yeah, basically it's very similar as the last fight. Independent experts predict the big beautiful bill will add $3 to $5 trillion to national debt. Yeah, I mean, yeah, I can see that. All right, so we bounced here. We've been finding bottoms around these levels. Not perfect, though. There's 22.8. We bounced around it. I think the obvious position is to short this. But I'd have to wait until 8:15 to short it. And again, we're basically flat on the day. We got ourselves into some good positions where we were very green on the positions. And we decided to let them work. And then they turned on us. And so we got out pretty close to flat. But look at this retest immediately of 22.8. And then we bounced right off of it. Yeah, I don't see any big breaking news that's going to influence markets right now. So Robinhood also launched an ETH and Solana staking. All right, so we're testing that 22.8 level again. We're too down for me to be interested in a... We're too down for me to be interested in shorting this here. I need to bounce back up to like 8:15. So if not, we're just going to watch the momentum on the downside. I don't have to take advantage of every move, but definitely downward momentum. All right, it's hot in here. I'm going to go turn on the... All right, look at this flush. We're under 23,000 now, or 22.8. Here, I'll be right back. Get some air in here. There we go. That's better. Yeah, where's the VIX at? I'm sure the VIX is pumping up right now with all this movement here. Yeah, look at the VIX. VIX is up to 17s, almost 20s. 1730 right now. We did a poll this morning. We asked, will the JOLTS report with JOLTS and Jerome Powell today, will the market break highs or pull back? 39% think we're going to break highs today. 46% think we're going to pull back. And 15 honest folks say, I don't know. We're sitting just under 22.8 right now. All right, NVIDIA at 156.20. $22,797, still cracking these lows. The VIX is up to almost the highs of the day. NVIDIA has been breaking down with everything else with it. Look at NVIDIA fall. Gold is pumping up. I'm watching for breaking news for you guys, but I don't see any recent ones. Tesla shares are now down about 6% in pre-market this morning. 6%. Elon posted. It was mostly on immigration, though. Microsoft unveiled. So Treasury Secretary Bessent also said this morning that maybe the Fed is waiting too long to cut. What are the current odds for rates? All right, so if we look at the NASDAQ break lows of the day again, so we just cracked lows again. Here's the Fed Watch tool. Fed Watch tool still showing over 20% chance of a cut this month in July. Over 20% chance of a potential cut this month in July. If we go to September, last time I looked it was like 78%. Yeah, it's 76% right now for September. So still looking very probable. And you got to understand, so this is 76%. Here, I'll put this up here. This is 76% for a 25 basis point cut. You have to add this. So we're at 96% likelihood of a cut of at least 25 basis points by September. So there's a 20% chance of a 50 basis point cut. And I'm sure if we take a look at the 10-year treasuries, yeah, they're at 4.2% for 10-year treasuries. And remember, these and interest rates follow each other. So with yields down this much, that means it's a higher likelihood that we're going to cut. And the NASDAQ continues to break lows. We're down to 795s right now, 795s. Connecticut also officially bans the state from creating a Bitcoin reserve or investing in digital assets. Goldman Sachs now forecasts the Fed to implement 3 25 basis point cuts this year, starting in September versus previous prediction of 1 cut in December. So basically, Goldman Sachs thinks that we're going to cut starting in December, and we're going to cut each consecutive month. Instead of doing a 50 basis point cut, they look at the VIX break highs of the day. So the VIX is now up to 1735. But yeah, they essentially think we're going to do 1 cut in September of 25, another cut in November, and another cut in December. Now, this is exactly what we did last year. Last year, we did a September 25 or a September 50 basis point. It's not exactly. Last year, we did a 50 basis point cut in September. It was the first cut in a year at that point in September of 2024. We did another 25 basis point cut in November, and then we did a final 25 basis point cut in December. And then we've been pausing since then. But there's a chance we cut this month. We'll see. No cuts today. Well, yeah, there's not going to be any cuts today because today's not the Fed meeting or decision. John, are you saying there's a high chance of a rate cut today? No, I'm not, because today has nothing to do with rates. No AC puts hair on your chest? Yeah. All right, VIX still climbing, Nvidia, NASDAQ still falling here. Jolts will be under 7 million today. You really think so? What they're expected at 7.3? Yeah, I mean, I don't think. I mean, maybe. The question is, does that make the market go up or down? If Jolts comes in super low like that, the real question is, does that make the market go up or down? I think there's an argument that it makes the market go up, just because I think it increases the odds of rate cuts. You know, weak economics like the Jolts report, even though the Jolts report is not really the standard. Look at the NASDAQ crack lows again and the VIX push higher. VIX is heading towards 20. Well, it depends on what Powell says. He's doing a meeting with the ECB, European Central Bank. Hi, good morning.
Hey, Sassy.
Oh, this is Sassy right here. She's a good dog. All right, baby. Make her famous, you know. It's okay. It's okay. I can if I should. Yeah. Here, I can. Do I roll it? Yeah, okay. Sorry, guys. I'm opening the windows here. I'm opening the windows. Okay, and then this one I pull up. Right. There we go. Okay, that's nice. Thank you. All right, so the NASDAQ is still breaking down. We're at 22,784. Big, deep momentum here. Structural shift in gold or speculative movement. Okay, so as the VIX goes up, the VIX is a volatility ETF, it basically reads uncertainty. As the VIX goes higher, gold's going to go higher with it. It's going to have a positive correlation because there's more uncertainty in markets. And as the market falls, gold's going to go up and the VIX is going to go up with it. So the reason gold is rising is probably a mix of the president and Elon beefing, the big beautiful bill skepticism, and just pullbacks from all-time highs that we've seen over the last week. NASDAQ, S&P all broke all-time highs. Nvidia broke all-time highs. It's not always going to continue, and sometimes we're going to get a big pullback, and then it's kind of, you got to think of the psychology behind it, which is, you got to understand, like the market is about group psychology, like mass psychology. As people start taking profit, other people get nervous and they start selling, and then more people get nervous and they start selling, and it kind of snowballs into deeper pullbacks. And that's okay, because usually we're still going to go back up eventually. Who knows when that's going to be, and it depends on a lot of different things. This week's full of economic reports ahead of the 4th of July, and so we have payrolls on Thursday, unemployment data coming out Thursday. We have the JOLTS report this morning. We got Jerome Powell speaking today at the opening bell. And then we have ISM manufacturing PMI, which is the big PMI data, the Institute of Supply Management data. And so all of that stuff comes out today and this week, and that's going to have a big influence on what happens. If we get really weak payrolls and high unemployment, it's going to increase the odds of rate cuts this month in July. If we get really strong payrolls and really high JOLTS report and low unemployment, it's going to decrease the odds of a rate cut this month. And so what the market wants and how the market reacts to this, as the NASDAQ continues to break down. Look at this. We're down to 780s. Wow, look at this drop. I'm going to look up breaking news here to make sure we don't have any. But, man. Okay, so no potential borrowers are contemplating. Okay, so Senate Majority Leader reportedly says the vote is expected pretty soon, according to the Hills Bolton. Snapping FMAP language to help Alaska has been worked out. They also said no potential borrowers are contemplating new U.S. investment-grade bonds on Tuesday, and it's highly probable that the U.S. primary market is done for the week, according to Bloomberg, citing an informal survey of debt underwriters. So that news is coming out. I don't know if that's affecting things. Let me see if I can get out of this. There we go. That's a little bit better. Are we live right now? Can y'all hear me? Okay. I don't know what I just did, but I must have moved something. Yeah, we're here. All right, guys, we don't have any economic data, but look at this market flush here right now. Wow. Okay, so the Fed Chair Powell is going to participate in a panel with the ECB, with ECB's leader Lagarde, Bank of England's Bailey, Bank of Japan's Udeya, and Bank of, I don't know where this one is, at 9:30 Eastern time. So look at the NASDAQ flush down here. Chad, is it time to buy this dip? I might try to. I know that's a crazy position here, but I think we've broken down a lot, and we can maybe start to average in. We've had multiple big red candles in a row. It's a little bit risky just because we could have some catalysts come out, but I don't mind kind of buying the dips here. And then just kind of sitting on this. We'll give it a second. That's a big pullback. The only thing I worry about in this trade is that a big catalyst comes out, destroying my position here. All right, so we're green. There we go. We're green. I'm gonna take a piece off here, lock it in. There we go. Take a little bit more off up there. There we go. Take a little more off up here. We'll try to hold this break even, but I got to be careful. All right, there we go. All right, so we had a really nice gain from that one. Look at the VIX still get higher. VIX is hitting 1750s right now, 1750s. Yikes. Jolts is at 10 o'clock. Yeah, the big beautiful bill, hyper important. It's too fast, honestly, brother. I'm not trying to mess with this right now. With how crazy this has been, dude, I'm not trying to mess with this. I don't want to sit in this. I think I could probably hold it and make some more money, but with all the catalysts coming out and the big market downturn here, I just got to be careful. So the U.S. president expects a ceasefire sometime next week and wants to return. In Gaza, there's a possibility of progress to reach an agreement soon. And then the president, Senate Majority Leader Thune is going ahead with the vote, hoping that Senator Murkowski will vote yes, according to the Hill's Bolton. Bolton adds if the bill fails on the final passage, Thune can bring it back, but it requires another vote-a-rama. So, updates on the BBB bill. VIX is still pumping up. Look at NVIDIA fall here, though. Look at the NVIDIA dip. NVIDIA down to 156. A little bit underneath that, actually. Yeah, so we have Jerome Powell today at 9:30 Eastern Time. It is now 8:30 Eastern Time. So we got about an hour before Powell. And again, we'll be streaming Powell live as soon as it happens. We just kind of have to wait. But yeah, Powell's going to be speaking. All right, look at that rebound. Like I said, I probably could have held that long position right there and made a little bit more money, but I think with the volatility of everything going on, it's a little bit harder. The VIX is a volatility ETF, Sam. Yeah, Powell's speaking again at 9:30 Eastern Time. Hey, Sassy, come here, baby. Come here. Come here. You gotta get up here. Come on. Come on. All right, baby, come on. No? You don't want to get up here? All right. Yeah, so here's that big rebound back up. Do I want to short this level here? I kind of do. We might add up to 22.8. Yeah, I mean, we made money in our long, but again, I don't think it's crazy to cut it early, even if we miss out on this move. Like, we're going to miss out on moves. I just don't want to get stuck in too much red action, if that makes sense. There we go. Nice. Take some more off here. Nice. And we're going to cut that right there. Alright, so we're nicely green on the day. We use this 22.8 level. Let's see if we keep going down. Like I said, we didn't really have any 8:30 data here today. Okay, so we got our ECB meeting up too. Yeah, so today is Tuesday. We had European CPI show up this morning. It came in at, as expected, basically everywhere. 2.3%, 2% year over year for regular, 2.3% for core. Again, today we got JOLTS expected at 7.3. We got ISM manufacturing PMI expected at 48.8. VIX is contracting pretty deeply here too. That long hair stuck to my beard? Well, I'm sorry, guys. The jobs report goes live at 10 o'clock. You got to read the bottom of the screen. Yeah, Apple's making moves this morning. Apple's climbing up. Apple up to 207 here. So we're moving back up to test 22. So Apple is moving up because a federal judge on Monday denied Apple's motion to dismiss a major antitrust lawsuit, but there have been reports that Apple's considering using AI technology from Anthropic or OpenAI to power a new version of Siri. The ongoing discussions and uncertainties around the U.S. trade policy. Alright, so we're moving back up to test 22,000. Alright, so we're at 22.8 again. We just tapped 22.8. So yeah, we tapped 22,800. Let's see if we can get over it. I mean, we're trying to fight our way back. Yes, we're going to live stream Powell. We're going to live stream the Jolts. We're going to live stream the ISM manufacturing PMI. So just stick around. You'll be able to watch the stream to see what's going on with all of it. But Powell speaks in less than an hour. Yo, people keep telling me the dog's hair is stuck to my beard. You know what? You're gonna make me. Where? You talk about this right here? That's just the sun. Oh, you're right. It is. Oh. You are correct. Okay. Thank you, I guess. At first, I was like, they're trolling me, but I guess you guys are right. You guys are right. I'm wrong. You guys are smart. I'm dumb. Alright, so look at this reject. Where do we reject, guys? Listen, top 3 greatest levels ever. Look at that. 22.8. Could have held my short, but it's alright. Yes, we're streaming Powell today. Yeah, we're definitely streaming Powell today. He speaks at 9:30. It's a really interesting day. Like I said, we got Jerome Powell speaking at 9:30 Eastern Standard Time. We also have the Jolts report going live at 10. We have ISM services going live at 10. So it's kind of interesting, but hey. We also have Jolts as well. So we have Jolts. Stick around. We got, what, 40 minutes left? We got 50 minutes left. We'll see what happens, though, with Powell. I'm curious. NASDAQ cracking lows here over and over again for the last few minutes. Alright, so we're breaking down here. We'll probably trade live as we cover Powell. So we'll put our window up while we're trading. Make sure we got like stock market here. Alright, there we go. Yeah, the big beautiful build drama is definitely going on. Why is the market so funky right now? All great This is the quote of the day. All great beards accumulate mass. Listen, I believe it, man. It's like the Blob if it gets big enough. I might shave this beard pretty soon, though. And again, I recommend you guys go check out my latest video. We talk about how we find levels like this. We talked about 22.8 way before this happened. We had this level on our chart, and we even shorted into it small. I'm not going to hold a position very long today, but we talked about this level a lot. And we, you know, if you go to our video section and look at the last video we published, we kind of break down how we find levels like this. It's pretty simple. It's not like the most complicated strategy, but sometimes simplicity works because the market's just human psychology. And so if you make it too complicated and you try to use all these different crazy indicators and strategies that are too nuanced, they're just not going to work. You got to think about what the pack, the group thinking is, and then just try to manipulate that or capitalize on that. And that's kind of what we talk about in the video. So check it out. We're starting to rebound back up. I think we're kind of in this middle zone where we could push down. We're definitely in a downward trend. Let's see. Yeah, we got non-farm payrolls Thursday. We have, we have payrolls Thursday. Yeah. Only 3 methods: FOMO, FUD, and YOLO. Is YOLO even a popular expression nowadays? Do the young kids still use YOLO? I don't know what's cool anymore. I really don't know. I should ask my daughter. She knows somehow. Can you hear the engine sound? It's no longer popular. That's what I assumed. Can anybody besides AT hear the engine sound? You can hear the fan? Okay. Let me turn this one off. It's nice and cool in here, but... Alright, let me know if that's better. Is that better? Hey, Sassy. How you doing, baby? Better? Alright, cool. Here you go. Also, guys, if you haven't already, check out TopStep. TopStep is a sponsor of mine, so they pay me money, and I'm biased in their favor. Genuinely very useful for traders. Most day traders lose money. So if you fund your own account, 5, 10, 20, 30 grand, you're probably going to lose it. Let's just be real here. At least a lot of it. And so instead of trying that, TopStep is a beautiful test of skill. It teaches you how to trade to a certain extent. You can risk less money. And if you pass it, you get a 90% funded account. And you get to keep your first 10K prior to that split kicking in. So it's the best of both worlds. If you fail, the base one is $50 a month. They give you a 50K demo. If you can make 3K in profit on the demo without losing 2K, which is a reasonable 3-to-2 ratio, if you can do that successfully, they fund you 50K, 90% split. And they pay out millions, fund thousands. They're the most legit one in the world. And it's just a beautiful way to learn how to day trade because you're risking something, but you're not risking 10, 20, 30 grand like most day traders end up doing. Ultimately, I think it's just going to save new traders money as well as allow people to get started for less. If you were going to pay for a demo account in a lot of places, it might cost you the same amount. And so the value's there, the use is there, and it's the best of both worlds. If you use my link, go to TopStepX, you get 0 commission. That's what you see on the screen right now. 0 commission, no PDT rule in futures. And I'll put this link up. I'll also pin it to the top of the chat. Great way to help support the channel. But again, I'm biased. They pay me money, so I'm biased. But understand CFTC 4.41. Read everything on the bottom of the screen. I'm not an investment professional. I'm not liable if you lose. I might have no idea what I'm talking about. Might be wildly wrong about anything I say. Don't copy me. And again, I'll put the link up right here if you want to check it out. I appreciate it. I'll pin it to the top of the chat as well. Oh, I thought the whole time you were on a boat. That would be a cool stream, but no, I get seasick. I was on a cruise ship one time when I was about 10, and they gave me virgin pina coladas, and I got seasick. And now I hate coconut for the most part since then. So yeah, and I got seasick on a cruise ship. So hey, what's up, Tiny? Hope you're doing good, Tiny. Thanks so much. What do you think rate cut? I'm not sure what you mean by that. What do you think rate cut? I think you could have probably argued a cut 2 weeks ago. I think that we've had weak enough economic data. I think Q1 GDP showed up at finalized negative 0.5%. So we showed up at a negative number. And if Q2 is negative, we're technically in a recession. And so, but the Fed's also still doing a somewhat restrictive quantitative tightening measure. And so they're still doing QT. And so I would be okay with two things with balance. I would be okay if we did a 25 basis point cut and then continued the quantitative tightening as balance, right? Because one's restrictive, one's dovish. And so, balance. Or I would be okay if we ended quantitative tightening, which is a reduction of the Fed's balance sheet through letting their bond holdings mature and run off and their MBSs mature and run off. I'd be okay if we ended QT and didn't cut 25 basis points and paused instead, right? Because it's balanced. It's balanced, if that makes sense. We didn't do either of those things. We paused and we're still doing QT. And I think Jerome Powell's logic is that he's worried that the tariffs and all the stuff going on is going to cause inflation to spike. But I think you have to be precautionary with rates, and you don't want the economy to turn too quickly. And I think there's a risk of the tariffs, not just for inflation, but also causing economic weakness. And so I think you got multiple risks from the tariffs, and I think you could probably argue a 25 basis point cut a couple weeks ago. Now, I'm okay with him pausing. I've said this once, I'll say it again. I'm somewhere in the middle right now. Like, I fear inflation more than everything else, because over the last 5 years, we've had crazy inflation, and most people are still unhappy right now because of that inflation that we've seen over the last 5 years. And, lowering interest rates prematurely could make inflation worse, not better, of course, and so could the tariffs. So we're somewhere in the middle. But I think you probably could have argued a 25 basis point cut a couple weeks ago. But at the same time, I'm sure he doesn't want to cause inflation. Inflation can get bad quickly. And so I'm sure he doesn't want that to happen, of course, Yeah, I mean, Guy, I'm not sure if you were paying attention to my stream 2 weeks ago, but I said almost verbatim what I'm saying today 2 weeks ago during my FOMC stream. I remember distinctly saying you could probably argue a 25 basis point cut, but I'm okay with not cutting if we really want to focus on inflation, because I fear inflation more than everything else, is what I said, I might have been telling people we weren't going to cut Wednesday because we didn't, but again, I'm somewhere in the middle right now. I think both things, you could argue both sides pretty reasonably, and so yeah. QT makes no sense at all. I just think we have to have balance. We're still being really restrictive right now. We're pausing and doing quantitative tightening, which is okay if it combats inflation. And inflation's almost towards the 2% target. It just depends on what happens with tariffs, and there's a lot of unknowns right now. You did say that verbatim. I know. Listen, I know. I think people get so emotional because of politics that, like, if I don't toe their political side's company line, they get emotional about it, and that's okay. I get it. I'm not very political, though. I'm very neutral, but again, I think you probably could have argued a 25 basis point cut a couple weeks ago, But I'm also okay with pausing, I guess, as long as next meeting in July and September we do big enough cuts to justify waiting, you know. So the tariff deadline is July 9th, which is in 8 days. So we got 8 days until the tariff deadline. I think China's reciprocals are paused until August now, though. A downturn in the economy can be recovered from, but inflation rise never goes away. Yeah, no, 100%. And like I said, like, I'm pretty neutral right now. But I also think you have to look at it in terms of what Lee just said here, which is that once prices go up, they don't go back down. The only way you literally get them to go back down is by entering a recession or depression. And even still, they usually don't go down enough to justify it. And so we have to focus on prices sometimes. And I think we've had a lot of price rises in the last 5 years. And so I'm okay with, again, I think it should be balanced, personally. Like, I think we could probably do, if we ended QT and paused until September, sure. Or if we did a 25 basis point cut but continued QT for balance, sure. I just don't want to see, yeah. I don't want to see the U.S. go into a recession, but I also don't want to see prices rise. And I think both of them are a risk right now. And you have the right to take in more data. Right, Femi, exactly. Like, if I change my decision, like, people bring up stuff I said 3 months ago, and I think people just, you know, like, I think people, sometimes they think I'm against them and their political side, when really I'm not. I'm very neutral. Like, even with the current president, like, I agree with some of the stuff he says, and I disagree with some of the stuff he says and does. Like, that's pretty standard. And I think most people can objectively say that. And so, you know, I'm not against anybody. Regardless, I fear prices going up, especially as a self-employed individual. I fear prices going up. I don't want to see them go up more. It should scare everybody, price rising. So the NASDAQ still respecting this 22.8 level. Currently holding profits on gold. What do you think will be the impact of the price of gold if Powell speaks positively in a few minutes? I mean, if he speaks positively, in theory, gold will go up if he speaks positively about the market, it's hard to gauge. If it makes the market go up, the VIX will probably go down, and gold will probably go down with it. But you never really know. Not an investment professional. I genuinely have no idea what the market's going to do. So you gotta figure that out yourself. I don't know. I don't want to influence anybody's trades there because, number one, we don't know what Powell's gonna say. Number two, I don't want to risk influencing anybody's positions. Yeah, we got about 33 and a half minutes left. Yeah, I mean, I see somebody saying that a depression is more likely than a recession. I don't know about that. I mean, a recession is 2 consecutive losing GDP quarters. A depression is just a continued, like a longer term version of that, you know? And so, I don't know. I don't think we're going to hit either one of them necessarily this year. The only way we'd hit a recession this year is if this current quarter was negative. I guess it's not this current quarter anymore. Wait, let me see. So January through March, April, May, June. Yeah, so and if last quarter was negative, quarter two, then we're technically in a recession. But I don't think it was. I think most estimates assume it's going to be pretty positive, and we'll find out this month. We'll find out this month, but we'll see. Time will tell. I'm in Michigan right now. Powell speech, hello, market drops, maybe. I'm not saying market doesn't blow 7,000 first. You mean the S&P? Where's that at right now? There's the VIX, it's at 1730s. I mean, we got a ways. S&P's at 62s. That's a big percentage higher. I don't know about that. Maybe. You never know. All right, so the total U.S. public equity market cap hit a record $63.8 trillion, according to Goldman. That's double the size it was 5 years ago. It previously it took 8 years from 2012 to 2020 for the market to double in value. It's now more than 3 times larger than Europe's. It's also larger than the combined market size of Europe, China, Hong Kong, Japan, and India combined. Yeah, like look at this stat here. That's crazy. Look at this. Yeah. I'll see that. Did you say you think this quarter would be negative? No. No, I don't think this current. So this is the reason I kind of paused is because technically we're in quarter 3 right now. July through September is quarter 3. So technically we're in Q3 right now of the year. If we're talking about quarter 2, I do not think it's going to be negative. I'm not really a big believer in the Atlanta Fed GDP now data just because it's inaccurate. But I think it's accurate enough to not be over 3.5% wrong for quarter 2. But anything can freaking happen. But we didn't have some massive decline in GDP, or we didn't have any massive catalyst that would drop GDP to a negative amount in quarter 2. And so because of that, I don't think we're going to hit a recession this year. Not unless things turn bad this quarter and next quarter, which is possible. I don't know if it's probable, but it's possible. But I don't think quarter 2 will be negative. And so in that regard, I do not think we're going to be in a recession right now. Yeah, this quarter is projected to be positive mostly everywhere. So we're still kind of consolidating around 22.8, chat. We're still pretty flat, sitting around 22.8. We do have Jerome Powell coming out in a little bit, so stick around. I wonder how long the last Jerome Powell ECB was. Okay, there's the last one. I'm trying to see how long he spoke last time. Hold on. Bear with me, chat. Look at me last year. I was at the same place. I'm too predictable here. Look at this. Look at me last year. Anyways. Yeah, we streamed. So last year, Jerome Powell spoke for about an hour and a half. So yeah, let me see. So it started. He's going to be on a policy panel with the ECB. It starts in less than 30 minutes. The last time it lasted. Last time it lasted for about an hour and 10 minutes. So it's about an hour long. So it could move markets. I mean, Jerome Powell is going to be getting interviewed, and it could move markets. He's going to be getting interviewed with the president of the European Central Bank, Lagarde, and other big leaders here from England and Japan and more. And so the conversation could certainly pivot to economics in the U.S., rates, all that good stuff. And so I would pay attention to this if I were you guys. We also have the JOLTS report live at 10. So just stick around. I predict breakout traders are going to jump in the NASDAQ now. Sorry. And then get squished. Maybe. Who is that handsome young man? That's young John, young Swire. I hope he roasts him. He's not going to say anything about the president. He just doesn't, man. Like Powell, look, you can say good things about Powell, bad things about Powell. One thing that Powell is incredibly strict with is he will not comment on inappropriate things to comment on. Basically, he's not going to comment on politics, especially biased politics. We saw this during the semi-annual monetary policy report last week or the week before. He's not going to comment on Trump. He's not going to comment on the president. He's just not. Regardless of whether he should or shouldn't, he's just not. Nothing burger day. I mean, I certainly don't think today's a nothing burger. Just to put this into perspective, we got Jerome Powell getting interviewed by the European Central Bank and more. We have the JOLTS report going live at 10 o'clock. We got ISM manufacturing data live at 10 o'clock as well. And so we got three major catalysts in the next hour. And all three of these catalysts have the big potential to move markets. And this is leading into the job report, the labor report on Thursday this week. We also have non-farm employment tomorrow. We got jobless claims, unemployment, payrolls, and more coming out on Thursday. And so it's a week for sure that could influence things. If you want to know whether we're going to cut rates this at the end of this month, you want to pay attention to markets this week. Yeah. Something burger, I think. Aside from my mouse clicks being really loud, this mic isn't bad. Yeah. Aside from my mouse clicks being loud, this isn't really that bad. This mic? The built-in mic to my PC? Yeah, we're still live. Are those chihuahuas in your house? No. No, that's young Sassy. I showed you guys Sassy earlier. If you missed it, you missed it. I don't know where she's at now. No, I'm at my, I'm in Michigan right now. I'm not at home. Yeah, so I'm not in Michigan. So we ripped over 27.8s here, or 22.8s. Still testing it pretty closely now, though. What's up, Blaze? How you doing, brother? The talk? When is the talk? I'm not saying this is a certainty, but the time might be in the title of the stream. There also might be a timer on the bottom of the screen. I'm not saying there is, but it could be possible there is. Mom's basement, yeah. I do hear crickets. Y'all are right. That is crickets. Honestly, it's kind of nice though. But can this mic pick up the crickets? I do hear the crickets. Yeah, I'm in Michigan right now. Michigan's just nice. I just like Michigan. Powell speaking at 9:30. We got 22 minutes left until Powell speaks. Yeah, it does look like a big bear flag, but the trend line is so upward. I mean, I think we got to document this level here. Are you a fan of the Detroit Pistons? I used to play ice hockey when I was younger. And I was terrible at it. I'm pretty sure the whole team hated me because I just wasn't good. But with that said, I do like hockey. I do like hockey. And I'll watch a little bit of it, not a lot. I don't freaking know. You mean the Detroit? Isn't it the Red Wings? Again, I'm not a huge professional hockey watcher, but so I mean I have no idea if there's a team called the Detroit Pistons. I thought it was the Detroit Red Wings, but it's been a while. I just love the weather here in Michigan, except last week was extremely hot. Listen, brother, I'm from South Louisiana. No hot weather here is going to be even close to comparable to South Louisiana, brother. It's all love. I love Michigan, but the weather here is great. Like, it is nice and cool out right now, which is a rarity. Do you think crypto's going for the 10 trillion market cap? Maybe. Let's take a look at Bitcoin today. Bitcoin at 106,850s here. 106,850s. We still got over 20 minutes before Powell speaks. Nasdaq's finally coming back up. We're at the 200 exponential right here, though. Let's see if we can take some trades right now. I'll take some trades leading into it. The problem is it's so strong right now, it just kind of ripped over the 200 exponential. I want to see if we do a move back down to 22.8. We might add into it here, but it's kind of a big move. The only thing I'm worried about with this position is I don't want to see support hold at my level here. There we go. I'm going to add to this and then try to hold it break even. Nice. Take half off there. I like this look, but I also got to be kind of careful. I'm going to hold it break even. Nicely green here. Heading in Jerome Powell. We got Jerome Powell in 20 minutes, chat. Y'all just be careful. We don't know what Powell's going to say. We don't know how much he's going to move markets. Remember, we also have regular Chicago PMI data at 9:45. So we got a whole bunch of stuff. I'm going to cut that right here and just lock that in. We got this support. The reason I'm cutting it here is because look at this. We got this right here. And if this makes it bounce back up, which it certainly could, I don't want to get stuck. So we're just going to be scalping today. But we're green. It's the gain is what it is. The gain in the mic is too high, meaning it picks up too much sounds around me. Which is okay, you know. We're going to fix our mic after today. Yeah, for a built-in laptop mic, it's really not bad at all. All right, chat, we got about 1,000 here. We still got about 20 minutes left until Jerome Powell speaks. But we're also going to day trade the opening bell. And we will put this up here. We're here, we're waiting. Chat. This looks pretty good, huh? I'll put up like gold here. Let's see if this 815 level rejects right here. So we're waiting. Still testing that 815 level. We got 15 minutes here, chat. Yeah, no, I'm probably going to buy that mic, actually, Sam. John, if you had 100K and you were starting out today, what would you do? How would you invest it? If I had $100,000, I'd probably diversify it into 3 to 4 different things. I'd take 25K and I'd invest it, or just keep it in an investment account that I day traded and invested with. Maybe a little bit more, maybe like 30K, and I'd invest with it, and then I'd also, I'd invest it, and then I'd also, and again, I'm going to preface this with this is not trading or professional investment advice. I'm not liable if you lose. I have no idea what I'm talking about. Might be wildly wrong. Interest rates are too high for me to really want to buy a house with a mortgage right now. So I'd probably take 30K, put it into a brokerage account of some sort, and buy stocks, maybe day trade some, and then maybe keep like another 10K to add on pullbacks if I needed to. But I wouldn't use all of it. I'd probably put like 15 into stocks or so, and then keep that rest. And then I'd probably buy some crypto with it, like Bitcoin. And then I would also, what I did with the other like 40, 30K left after buying crypto and stocks, you know, there's a couple of things you could do. But if it was 100K, I'd probably put a lot of it in the market, actually, now that I think about it. Maybe some bonds to hedge, but yeah, it depends. There's a lot you can do with it. I like real estate, but 100K is not really enough to get into real estate, and interest rates are too high right now for real estate. All right, chat, we got 14 minutes. 14 minutes. All right, so we're still rejecting right around that 200 exponential, and you can see this level here, right? Like this is the 200 EMA right here. So you can see us reject this. Yeah, I mean, I'm in the US. I'm not really, you know. Yeah, I mean, 100K, it'd probably mostly go into the stock market, to be honest. Just because the stock market, if you put 100K into the stock market today, like, look, we could do the math here really quick, and the math is very easy. The S&P averages 8 to 10% a year. And so, say you got $100,000, and you make 9%, which includes crashes, includes pullbacks. This is on average over a century of data, right? So let's say every year you increase at about 9%. But within 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. In 20 years, you're going to have almost 600,000 from that 100K. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 30 years, you'll have about 1.3 million. The compounding effect of that is profound. And it's what a lot of people get wrong. They get so scared to put their money in the market, they just don't do this, which is one of the easiest things to do. And of course, it's not guaranteed. You never freaking know. Yes, we could crash, we could pull back, but this is incredibly consistent. And so doing this and then maybe hedging with real estate and bonds and whatever you want to do makes sense. You know, I'd put some in crypto as well, though. But yeah. What's that really worth in 30 years with inflation? We could do that one too. All right, so let's say we got 1.325 million. And let's say inflation over the next 30 years is at an average of 2.5% a year. 2.5% a year. 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Okay, it would still be like you 6x'd your money in 30 years. With inflation, it'll be about 620,000 in buying power today, right? So you're still going to 6x your money in 30 years, keep up with inflation, beat inflation, and 6 times your money. And that's why it's valuable, right? And you might do better than this too if you make some smart purchases, but every analyst says S&P will never be 8% again. In what context do you mean that, Chris? Do you mean it's going to do better than 8% or worse than 8%? Because just to put this in perspective, last year in 2024, the S&P did 50, or the NASDAQ did 50. The year before that, I think it did like 40 something. It did 105% in 2023 and 2024 combined. And so that seems to at least average 9, but you know. Yeah, I don't know why Powell's speaking right at the opening bell. I'm really not sure. Alright, I'm going to turn my AirPods off. I want to see what happens here. Alright, we got 9 minutes, chat. Okay. I'm going to be able to hear Powell. There we go. We're in there. Okay. Again, Powell's in 9 minutes, chat. 9 minutes. 7, really about 8 minutes. We're now back under 22.8. 22.8. Yeah, we got Jerome Powell speaking soon. Make sure we're live here. I'll give you guys the most real-time one too. So just bear with me. We'll try to make sure you guys are in there. Alright, yeah, so we're going to have this up live for you guys. I'm going to make sure you guys get the most real-time one, too. Alright, guys, 7 minutes here. Again, hit the like button next to the play button. Hit the subscribe button. We appreciate it. Look at Apple here. We'll put gold up, maybe. What do we put up? Gold. I think gold's one of the more relevant things to put up. Look, gold at 33.59s right now. 33.59s. And so remember, guys, today we have the JOLTS report live at 10. We have ISM Services PMI going live at 10 as well. We have regular manufacturing PMI 9:45 in about 20 minutes. And then we got Jerome Powell in 6 minutes. So, yeah, we got some stuff. Just be ready. So Tats, do you want my social security number as well? What about my mom's maiden name? You need that too? Yeah, so check it up on recent news here. Tesla CEO Musk is said to oversee Tesla sales in Europe and the US after Ashfar left the company, according to Bloomberg. Also, White House CEA Chair Miran says he is optimistic about trade deal with Europe, says we are in crunch time. Warner Music Group and Bain Capital announced the launch of JV to invest up to $1.2 billion in iconic music catalogs. Merck also completed acquisition of Springworks. The president said, quote, "Who wants an electric car? I don't want an electric car. There's one problem with it." I'm not saying I agree with him, but all right, you guys ready? Yes, we need both, and approximately within 2 minutes, what time were you born, as well as the location. Demographic shifts will sadly prevent the great return seen for so long. Mainly top 7 stocks are the level of influence. I don't know. I think the top 7 stocks, while it might fluctuate, meaning the individual stocks within the Magnificent 7 or the top 7 in terms of weight, might fluctuate over long periods of time. I think indexes or indices are going to be incredibly reliable regardless. But maybe. I mean, who knows? You know, you never know. Hey, baby, how you doing? Alright, guys, 5 minutes before Powell. And again, what we're probably going to do is we are going to stream Powell, but then at 10 o'clock, we're going to do a breaking news kind of thing where we kind of dub in, say, hey, breaking news, the JOLTS report showed up at X amount. We'll also put it up in the chat as well as on screen as well. So we'll put the JOLTS numbers, the ISM numbers, all that good stuff on screen and in chat, so forth. Honestly, Carol doesn't want a Lambo. I approached Carol the other day and said, hey, I might buy a McLaren. Because my logic is like, look, I could buy a McLaren drive it for a few years, and then sell it before the price falls out. And I think that's fine. I'm not holding on to it though. But Carol's like, no, I mean, we already have some cool cars, so like, we don't really need it. She's pretty minimalist, I would say. All right, guys, we got 3 minutes left. 3 minutes. Yeah, I mean, I'm just thinking of it. I don't really want to. I have a hard time spending that much money on a car, especially a depreciating asset like a car. So it's probably just me daydreaming. I mean, I could buy one if I wanted to, but I don't. It just doesn't make financial sense for me. You know, I don't have that much money to where it's like FU money, and we already have some pretty nice vehicles, and so, yeah. Yeah, I mean, all right, guys. Hey, 2.5 minutes. Make sure we are set up and live. There we go. I like Porsches as well a lot. All right, guys, we're waiting here. Again, hit that live button next to the play button. Hey, what's up, Fender? Hey, all good, bro. Yeah, I like Porsches a lot. I really do. That was like one of my original dream cars. Get a GT3? That's what I want. Yeah, Nick knows. All right, guys. Make sure I got this up. Yeah. All right, yeah, we're waiting for them to start. They're a little late. That's all right. I'm gonna turn the music off now, and we are going to make sure our desktop audio is loud. You know, people tune into my stream because we make it loud. And so you'll make sure you'll be able to hear this when it starts. We're just waiting for it to start right now. That should be good enough to start. All right, there's the timer. Again, we're waiting for them to start right now. Okay, here we go. Okay, so this one's actually a little bit early. All right, there's the opening bell, guys. There's the opening bell. There we go. So we're waiting for them to start, as you can see. They're usually a little late, but that's all right. Yeah, make sure you hit the live button next to the play button. All right, so NASDAQ is pushed up a little bit at the opening bell. Live stream's about to start. Okay, nice. Again, hit the subscribe button, hit the notification bell. Again, check out Top Step if you want to help support the channel. No PDT run futures. Beautiful way to learn. If you want to learn and potentially get funded between 50 to 150,000, check out Top Step, the most legit one in the world. The base one's $50 a month. If you pass it, you get a 50K funded account, 90% split. They're an affiliate or sponsor of mine, so I'm biased because they pay me money. Not an investment professional, but you can check out the link. I'll put it in the chat one more time. Great way to help support the channel. We're just waiting for them to start. We got Jerome Powell speaking with the European Central Bank, specifically President Lagarde, and yeah, just be ready. We're waiting for them to start here. We got it up. Should be pretty smooth right now. Okay. Stop spamming. Here's the link right here if you want to check it out. Still waiting for them to start it up. They're a little late. There's the opening bell, though. Market's a little muted here. It could be choppy because of this specifically. Yeah, gold's on the bottom chart. You can see it on the bottom right. That's gold. Apple. Let's take a look at Apple. Yeah, look at Apple at the open. Wow. Up to 208s right now, 208. Still waiting for them to start. They're a little late, but it's okay. This is the ECB forum on central banking. We got Jerome Powell speaking. We'll have Jerome Powell speaking as one of the members. Again, just don't worry. We're going to mute ourselves when this starts. All right, look at Apple give it back here. So Apple coming back. Yeah. So sitting tight, waiting here. Powell to say solid at least 10 times. Yeah, probably. Again, waiting for them to start. Okay, so they're starting up now.
Related to aging, digitalization, greening of the economy. And with all that, we have to deliver on our mission, price stability. So if you're interested in those issues, come to the ECB forum in Sintra. We will debate all that and more.
All right, guys, let me know how the volume is. Volume should be pretty good. We have 10 minutes before manufacturing PMI data drops as well in markets.
Welcome back after lunch. I'm delighted to announce one of the highlights of the ECB's Sintra Forum, our policy panel. The world economy is undergoing a period of rapid and intense change. The questions of our next panel, the questions for our next panel will cover what these fundamental shifts mean for the future of monetary policy, and we are honoured to have an exceptional lineup of officials to answer them. We are also honoured to have Francine Lacroix, anchor and editor-at-large at Bloomberg Television, to be guiding the conversation. Francine, the floor is yours.
Claire, thank you so much for that introduction. What can I say? We have 1 hour and there's a lot to discuss. So welcome to the policy panel, Sintra 2025. Now, from tariff-related trade ructions to oil price gyrations, caused by also Middle East hostilities, there are many questions on, first of all, how to handle the fallout from some of the political decisions, but much more how the economy behaves. Now, 1 year on since the last Sintra panel, and of course halfway through 2025, global policy needs to navigate risks posed both to inflation and growth, a challenge highlighted by the Bank for International Settlements in a report this week. So let's get started. We have 1 hour. Kazuo Ueda, Governor, Bank of Japan. Of course, our host, Christine Lagarde, of the European Central Bank President. We have Jay Powell, Chair, Board of Governors of the Federal Reserve System. We have Chang Yong-ri, Governor, Bank of Korea, and then Andrew Bailey, Governor for the Bank of England. Madame Lagarde, let's start with you as our host. So first of all, thank you so much for having us all here. We had a little bit of data today, this morning, consumer prices rising some 2% from a year ago, up from May's 1.9%. But then the tariffs still loom large. So how do you see that developing?
Well, first of all, I would note that we are at 2%. And this is the latest reading. This is also the target that we have had, and this is the projection that our staff is indicating for the medium term, which is exactly what we had anticipated. So I'm not saying mission accomplished, but I say target reached, okay? And I think we should start by recognizing that. We faced a massive amount of shocks, compounded shocks occasionally, and we are now through that disinflationary process that we have conducted over the last 2 years. And yes, we are facing a lot of uncertainty. Yes, we are facing the risk of fragmentation increasing. And yes, we are facing geopolitical developments that are worrying generally, but that also are causing two-side risk to inflation. So we have to continue to be extremely vigilant. We have to continue to be committed to delivering on our target. And I think we are at this point in time in a very good position to do that. So we are well equipped to navigate the tormented waters that we should anticipate.
Chair Powell, tariffs are not yet showing up in inflation. Is this forcing you or your staff to actually rethink what the models say about how much the tariffs will ultimately through some of the final prices?
So thank you, Francine. And Christine, thank you to you and your colleagues for putting on another great conference here today. It's been a pleasure. I guess I would start, if I may, by saying that the U.S. economy is in a pretty good position. Inflation has come down close to 2%. We're at 2.3 headline, 2.7 core. The unemployment rate is at 4.2%, so we're healthy overall. If you ignore the tariffs for a second, inflation is behaving pretty much exactly as we have expected and hoped that it would. We haven't seen effects much yet from tariffs, and we didn't expect to by now. We've always said that the timing, amount, and persistence of the inflation would be highly uncertain, and it's certainly improved that. So we're watching. We expect to see over the summer some readings, higher readings, but we're prepared to learn that it can be higher or lower or later or sooner than we'd expected.
But, Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now, we're waiting.
Governor Rhee, South Korea's economy is, of course, highly reliant on trade. Putting aside the deals that each government can strike with the Trump administration, what can central banks in your position do to shield economies from the impact of trade tariffs?
Actually, about the tariffs' impact on inflation, our current inflation is well stabilized around 2%, and we believe tariff tends to be deflationary rather than inflationary for three reasons. One is Korea is not likely to use retaliatory tariff. Second, we import 22% of our import from China. And recently, export price of China has been falling at 5% a year for several years, and we believe that it will continue to do so. And at this moment, our growth rate is 0.8%, which is well below our potential growth rate. So aggregate demand pressure is much lower. So our problem is not the inflation itself, but the gross impact of tariff.
So what does that mean you'll do going forward?
Yeah, actually, we have been in an easing cycle, and we cut our interest rate 100 BP from last October. And we will continue to be in an easing cycle given our growth rate. But recently, financial stability risk has been rising, especially housing price in metropolitan area is increasing very fast. So we are keeping an eye on this financial stability risk in deciding the pace and the timing of the further cuts.
Governor Bailey, you've taken the view that the latest rises in inflation in the UK will be transitory. Why are you so confident that inflation will fall back?
Actually, you may have detected I've tried to avoid using the transitory word because it was, oddly enough, it has a bit of a history. But to be serious, obviously any increase in inflation is an increase in inflation, sorry to state the obvious. The reasons it's gone up is really entirely due to so-called administered prices. Now, as I say, that's an increase in prices, don't get me wrong. but it's not telling us much or anything about the context of the economy. In other words, it's not telling us anything really much about the balance of supply and demand in the economy. So I think the key judgment for us is, are we going to get second round effects from this this pickup? And of course, it's nothing like the pickup of a few years ago, just to be clear. And my judgment is at the moment is that the context is different, that we do see evidence. I see some signs of softening in the economy, I see signs of softening in the labour market. We are going to have to see those come through, though. I mean, come through into prices. I think we've still got to see the evidence and prices. But that background context allows certainly me to say, look, I think the direction of interest rates continues to be downwards.
When you look at all of the uncertainty, again, it's a bold call given what happened to oil prices and trade negotiations?
It is. I mean, I would say two things on that. One, I think, as others have said, it's probably, Jay was saying, I think it's a bit too soon, I think, really to see the price effects coming through from the trade and tariffs action. We've made a point of saying also that, I think as Christine was saying, that these are two-sided. They could go either way. Could be weaker demand. We could see supply chain disruption. And the second thing, of course, is that some of these effects, if you take the oil price story, it's gone up, it's come down, all since our last meeting, effectively. So, we always reach for the lexicon at this point. I mean, we've added unpredictability to uncertainty. I was slightly amused at the introductory film this morning with Christine saying all these words, because it's true. Because not only are we getting uncertainty in the sense, the range of outcomes, but unpredictable in the sense that if you get things like, the tariff action, history really isn't a particularly good guide to that, actually. You can't really draw much from the past on that.
Now, Governor Ueda, you're in a slightly different situation, right? Japan's CPI has stayed above 2% for 3 years now. What do you see as the fundamental changes in your economy that make inflation more persistent?
So let me say, to put it simply, as you say, headline inflation has been above 2% for almost 3 years, while what we call underlying inflation is still somewhat below 2%. That's the situation we are in. But if I could decompose it further, there's probably about three components to it. First, there's underlying inflation dictated by wage price dynamics, whereby increases in prices affect wages, which further affect prices, helped by resilient domestic demand. This component has been going up slowly, but as I said, it's still somewhat below 2%. Then there's going to be perhaps a second component, which will be the expected negative effects of possible tariffs on the economy and on prices. We are expecting this to take place, but we haven't seen that yet. There's a third component, which is domestic supply shock generated by increases in food prices. Actually, this component accounts for about 50% of the headline inflation we've got at the moment. So netting these three, we think the first component and the second component will produce a slow increase in underlying inflation toward 2% by end 26 or 27. The third component, food inflation, is going to subside toward the year end. So that we will be closely monitoring interplays between these three forces.
But, Governor, how do you view trade concerns the day after President Trump threatened Japan with more tariffs?
Well, it's being negotiated by our minister in charge, so I'm trying to avoid making any specific comments on this.
So let me just ask you, what will be the key trigger for Japan for deciding further rate hikes?
Okay, as I said, it will depend on the relative strength of the three inflation dynamics I was describing, and we need some more information to determine that.
President Lagarde, when you look at rate cuts, I mean, are we gonna? Where do you see actually the ECB going? You're in a pretty comfortable position right now, out of all the central banks.
Data will tell. So I think we are determined to continue to be data dependent, to decide meeting by meeting. and to not commit to any particular rate path. That's the docs are. And we're very lucky because we have just completed our strategy assessment, which really gives us a good framework and good strategy lines within which to operate. But those three aspects that I have mentioned, data dependent, meeting by meeting, no commitment to any particular rate path, are constant in that ongoing strategy based on what we have concluded actually yesterday.
Jay Powell?
So from our standpoint, as you will have seen, a solid majority of FOMC participants do expect that it will become appropriate later this year to begin to reduce rates again. And so, that will depend, though, as Christine just mentioned, on the incoming data. We'll be monitoring particularly what does show up in terms of inflation or what does not show up, and also carefully watching the labor market. We watch very carefully for signs of unexpected weakness. We see a gradual cooling, but we don't really see that yet. So those are the things we'll be watching. But as I mentioned, a majority of us do feel that will be appropriate in the remaining 4 meetings of the year to begin to reduce rates again.
Madame Lagarde, the euro has also surged about 12% against the dollar so far this year. Are you concerned that its strength runs counter to your efforts to also loosen financial conditions?
I'm not going to comment on the exchange rate. We take it into account for purposes of our projections. Obviously, it has an impact, but it's a reflection of the market conditions and assessment. It's also a reflection of the strength of our economy. But there has been a clear appreciation relative to the dollar, and depending on how you look at it, it's either a depreciation of the dollar or an appreciation of the euros. And there might be a bit of both in that particular case. We're also looking at the movement, the flow of capitals and the attractiveness of euro-denominated assets, which is also an interesting phenomenon that we've observed lately.
Chair Powell, is it fair to say, I know nothing is guaranteed, number one, we all know this. Barring a real surprise, is July just too soon to seriously even consider a rate cut?
Yeah, I really can't say. It's going to depend on the data, and we are going meeting by meeting. I mentioned how I'm thinking about that, but I wouldn't take any meeting off the table or put it directly on the table. It's going to depend on how the data evolve.
Governor, what's the biggest risk stemming from protectionist trade policy, actually, for the global economy and for South Korea's?
Can you just...
The biggest risk stemming from trade and protectionist measures?
The Korea has a quite export-driven economy. So whatever the global fragmentation has a serious impact, not only direct impacts through the U.S. tariff, but also indirect impacts through China, Mexico, Canada. And we easily can, it really depends on what's going to happen on July 9th. We are actually waiting for the result, but we don't know what's going to happen. But for example, like if the tariff goes back to 26% retaliatory tariff that was announced in April 2nd, and then also with a lot of sectoral tariff which affect our economy, aluminum, steel, and cars, we can easily say that it has an impact larger than close to 1% in our GDP growth rate. And depending on how long it lasts, I think we have to adjust to the new supply chain, so the impact will be larger. But I hope that scenario won't come.
What is the most concern for the Bank of Korea? Is it a stalling South Korea exports, slowdown in global trade, or a downturn in the U.S. economy?
It's all linked, right? It's all linked, right? So it's a global economy slowdown. And one thing, I mentioned some negative sides only, but one positive side, I don't know if it's positive or not, but Korean companies has been preparing for the supply diversification long time ago before the tariff, U.S. tariffs start to, because we have some issues with China, and then also Chinese industry has become very competitive. So we had to relocate our production site from China to elsewhere. So relatively speaking, we are well prepared. And second, still good thing is that we have some strong industries such as semiconductor, which benefit from the AI technology development. So I hope that we can manage it. But on the other hand, given we look at the sheer size of the export dependence, we will be significantly affected.
Governor Bailey, do you think interest rates will be closer to 3 or 4% at the end of the easing cycle, given all of the inflation and trade dynamics?
That's a subtle way into the R-style question, actually, I would detect. So look, I'm fairly cautious about the whole discussion of the level of R star and therefore sort of where rates are going to reach in the cycle. There is huge uncertainty around it. What I think is important, and what we spend our time looking at, is how restrictive is policy, both now and going forwards. And our staff do a huge amount of work on that front to judge the restrictiveness of policy in the current context, and how restrictive it's going to be looking forwards if you project forward with the market curve. And the assessment we've got at the moment is that policy remains restrictive. It will continue to be restrictive, although the level of restrictiveness will come down over time, which is what I would expect. So I would expect that level of restrictiveness to come down to a point where it goes more neutral. But I think you have to judge that in context. Just to give you an example of that in the UK economy, the level of household and corporate debt in the UK economy is actually lower than we would have expected it to be, but based on past experience. So again, that feeds through into just how restrictive policy is at a given interest rate. It's somewhat less restrictive probably than it would have been historically.
Could I ask all of you actually thoughts on the neutral rates? Chair Powell.
Thoughts on the neutral rate? I think there are countless empirical and theoretical ways to derive it. At the end of the day, I think I like to look at the economy and ask whether our policy stance is having the effects we expect and want on the economy. And to me, I would say we're somewhere probably modestly restrictive at this level. And by some formulations, we're more restrictive than that. But if you look at the economy, growth has been solid. The labor market is solid and still at historically low levels of unemployment. It's not an economy that feels like it's suffering from very tight monetary policy. But I would say that policy is still restrictive.
President Lagarde?
I would say that it's a nice concept, it's interesting, and many of the terribly talented and brilliant economists in this room actually are delighted with discussion about the neutral rate. But honestly, as we're getting closer to target and to where we should be, or are where we should be, and I don't want to pass judgment on that, I think that discussion becomes less relevant. I think what our staff at the ECB measures is leads us to believe that it is higher than where it was before the great financial crisis, but it's relatively low as well, compared, for instance, with what the US neutral rate is at the moment. But it's, in a way, it's a bit of an illusion to discuss that at the moment, because the neutral rate is normally defined in a world where there is no shock, where you have perfect equilibrium. Now, are we in a world with no shocks at the moment? I don't think so. So it's nice to have as a concept, nice to elaborate on it, nice to do research on it, but to use it at the moment where we are as a guiding principle to where we should be, I don't think is particularly appropriate.
Andrew Bailey?
Well, that sort of continues what I was saying earlier. Again, I don't use it as a sort of a guide to where policy should be, but I think this whole concept of restrictiveness is, of course, critical to our judgment, because that's critical to the transmission mechanism of policy, which we have to judge every time we meet. So that's a judgment that, in a sense, we renew every meeting we have. I think I'd rather agree with what Jay was just saying. I think in our case, policy is restrictive at the moment. It's going to become less restrictive based on the curve that we've got in the market. That's what I would expect. We will judge it each time.
Governor Ree? Similar?
I have nothing to add.
Yeah, how would you see it, Governor Ueda?
Yes, so we also estimated something like the neutral rate a number of times. But the range of estimates is very wide. So, but at least we think we can say that the current rate is below neutral. But other than that, I would refer to what Jay said a year or two ago in the Jackson Hole conference, which was like, we are guided by our stars, but under cloudy sky.
President Lagarde, can you talk to us about scenario and why this is, because of the shocks and actually the changes that are going very fast, why scenarios make more sense as a template of the economy?
Oh, okay. So this is a topic that we have largely debated as part of the strategy assessment that we conducted in the last year. And I think, in fairness, the baseline, which is the essential projection on which we work and we determine our monetary policy stance, holds and is decisive in our consideration. But at the same time, our staff has, I wouldn't say forever, but as long as I know myself, has always conducted scenario analysis, sensitivity analysis, in order to arrive at the most solid baseline. It is probably the case that we will do more of it, more systematically, that we might publish more often than we have. We have published, I think, in the last few years, in four circumstances we have published scenario analysis. The invasion of Ukraine was one, COVID was one, the oil crisis as well, and the tariff threats. So all those were exogenous factors that were sort of hitting our screens. I think we might do more scenario analysis that will be looking at the longer-term trends that will affect our economy, and that will inform and strengthen our baseline, enhance it probably in its reliability. So that's what we are debating at the moment. How this is built, what assumptions we make, what choices are decided in terms of publishing will be determined by the Governing Council in good intelligence with our staff.
Yeah, and Jay Powell, on scenarios?
So for many years, we have used scenario analysis internally, and I personally find it very useful. I think many of my colleagues do too. You have just many different kinds of scenarios. We have 6 or 7 at every FOMC meeting. They're often the topic of discussion among governors and at the meeting. We have not taken the step of using them as a public communications device, and that's a big difference. So that's one of the things we're going to be talking about this fall. We will wrap up the first part of our framework review, which is the consensus statement, our monetary policy framework, we expect to by the end of the summer. And then we're going to use the fall meetings to look at communications ideas, and that's one of the ones we'll look at. I will say it has a lot of appeal and a lot of questions, and so my expectation is if we're going to do something in that area, it's going to be putting a toe in the water and not just throwing ourselves over Niagara Falls on it. So I can imagine a situation where we would try that in a particular circumstance, but for us, we're just going to do the work and understand it, as many other central banks are doing now.
In our case, we use the scenario analysis in our risk management section as a kind of representing the tail risk. But I have to read the ECB report, but if we have to move that section into the more forecasting section for public communication, I wonder whether it's going to be easy to get some consensus, which scenario we have to do it among our probably members in the monetary policy meeting. So because that scenario and the underlying assumption may be much harder to communicate, to agree among the members. And also, it's specific to us, but how I can differentiate the previous approach of risk management section to the forecasting that I have to think over what we have.
Hey, breaking guys, ISM manufacturing PMI showed stronger than expected at 49. The JOLTS report showed up at 7.75. 7.75 stronger than the 7.3 million expected. 7.77 for JOLTS and ISM PMI 49 versus 48.8, both stronger than expected.
They weren't symmetric, by the way, but they were on either side. For me, they were very useful in terms of my decision making because they helped me to answer the question, given the uncertainty. If I'm wrong in my judgment, how wrong am I going to be? Do I think I'm going to be? And what would be the consequences of that? And what would we then have to do to deal with them? I mean, is it manageable? And that was helpful. And then I think the question, coming back to what Jay was saying in terms of public communication, I mean, this is the big step, I think, and it is challenging. I'll tell you why, because I say this quite a lot. We make a lot of conditional statements. You may have detected this in all the many interviews you do. And I'm not making a personal comment now, Francine, but a lot of those conditional comments get immediately translated as unconditional comments. It's sort of life.
We're quite careful, but
no, it's not personal. This is the general point. And so the reason I say this is that if we, and that's about the central case, by the way. So if we introduce scenarios, that's a message to us that you're going to have to do this very carefully in that world, because to get the point across about, there is always a range, there's always uncertainty, there is always risk. How you calibrate those and how you, as Jay was saying, how you communicate those publicly is critical, but pretty challenging, frankly, in that environment.
Governor Ueda?
Yes, we also carry out many simulation exercises about scenarios, but we have not, as far as I know, published them. We do discuss in our quality reports qualitatively what risks we have in mind. Mm-hmm. On top of that, I would say, in a very rough way, we are carrying out something like a risk management approach to monetary policy making, which is probably a bit similar to what Christine was talking about yesterday. I can't come up with a good example, but risk scenarios, thinkings about tail risks, sometimes do affect our monetary policy making.
Can I ask you all about the dollar, everyone's favorite subject? So when you tune out noise, right, of the past few months, what has really changed about the dollar? Governor Rhee, are we really seeing some sort of paradigm shift in the status as a reserve currency that means historians will look back on 2025 as some sort of pivotal year?
I don't think so, especially in case of Korea. Our Korean won has appreciated significantly in the last 2 months, but I think it's mostly due to the very unique situation that we had. We had a very unexpected, unnecessary martial law declaration in last December, and after that, this political risk, together with the slowdown of our economy, really make a Korean won depreciate much more than our fundamentals explain. So, in some sense, the appreciation that we have observed in the last 2 months, in some sense, normalization of our currencies. And as for the kind of long-term shift of the dollar sentiment, we have discussions, but looks like people are talking about it. But at this moment, they keep the dollar assets while they're increasing the hedge ratios. So at this moment, I think the lion's share of the impact, BIS report show this one is impact is mostly moving from the unhedged to the hedged positions. So we have to see what will happen in the future.
Yeah, Governor Bailey?
Well, I'd say two things. First of all, I think that it's important to bear in mind what the definition of a reserve currency is, and how it's evolved over many years. So I like John Ray. I don't see there being a major shift at the moment. Not least because in this day and age, the definition of a reserve currency has as much to do with the supply of safe assets into the market that can be used for all the purposes of collateral and security that they are, as much as it is about a pure exchange rate. So I think we're a long way off that change happening. The second thing is going back to something Christine was saying earlier. I mean, when we look at financial conditions, which we do, of course, but I do think particularly, I always believe this, but I think it's even more relevant at the moment to unpack a financial conditions index. And the reason I say that is because we've seen a breakdown in the correlations of the components of a financial conditions index. So you look at bond yields, you look at exchange rates, you look at equity risk premium, for instance. Those correlations are not the ones that we've tended to see established over time. So you have to look at it much more carefully. There are stories, to my mind, about each of the components of that. So when I look at the exchange rate, I look at it very much on that basis. I don't think it's sensible to pack it all up as we normally would and say it's all behaving normally, because the correlations are not actually.
Governor Ueda, there's also many colleagues at central banks, I guess, around the world are building up gold reserves. Is that the only real alternative to the dollar?
I think it's up to a certain extent what areas like Europe or China would do in terms of improving the efficiency or convenience of their currencies, like the kinds of things we were discussing this morning, capital markets integration, and these things will change the degree to which the role of the dollar may decline in the future.
Women Lagarde?
I think, I don't know if 2025 will be a pivotal year. I would tend to think that, yes, it might very well be. But for a major change to occur will take a lot of time and will require a lot of effort. And I completely agree with the points made by Andrew about the dichotomy that we're seeing at the moment. And that might be an indication of the fact that investors are looking at options. This is what investors are saying. They ask questions, they seek alternatives, and whether that translates into a general lack of confidence that will be further fueled by more uncertainty, more unpredictability, a bit of a jump in the unknown on several fronts, not just monetary policy, not just even the economics, but beyond that, in terms of security at large, for instance, I think remains to be seen. It's not going to happen just like that overnight. It never did historically. There is no reason it should now, but there is clearly something that has been broken, and whether it is fixable or whether it is going to continue to be broken, I think the jury is out on that front.
And Chair Powell, how do you think we'll look back on 2025?
So you're asking me how we're going to look back on 2025?
Yeah, how will historians look back on this year? Is it pivotal?
It's clearly an important year. There's a lot going on, with trade, and I think I'm hopeful that we'll look back on it as a year where we successfully challenged some significant economic changes, and our job is to make sure that is the case.
You get attacked by the president a lot on a personal basis. Does it make your job harder?
I'm very focused on just doing my job. I mean, there are things that matter are using our tools to achieve the goals that Congress has given us: maximum employment, price stability, financial stability, and that's what we focus on, 100%.
Madame Lagarde, if you were in the same position as Chair Powell, would you do anything differently?
I think I speak for myself, but I speak for all colleagues on the panel. I think we would do exactly the same thing as our colleague Jay Powell does. The same thing. Yeah. Right?
Yes.
Governor Bailey, is the rest of the world decoupling from America but pulling tighter elsewhere? How do you see fragmentation happening?
Well, fragmentation, were it to happen, in my view, is bad for activity in the world economy. No question about that. I mean, if we reduce the openness of the world economy, that will be bad for activity in the world economy. Now, I temper that in one respect, because obviously we have learnt a lot about the robustness of supply chains over the last 5 years, and it is, of course, appropriate that there will be adjustments to that. But if we see a breakdown of the openness of the world economy sort of beyond that sort of resilience that we do see as needed, then that's bad for activity, it's bad for the world economy, and that I'm afraid is something that I think we need to be very clear. I've said a number of times, look, there are reasons why this is happening. It's not right to just go around saying this is all wrong. There are no reasons why this is happening. What I think is very important is that we get back to a governance of the world economy where we can address these issues in the appropriate multilateral fora, and get to the question of what lies behind these issues, what's at the root of these issues, what exactly are the issues, and what do we do about them. And I can't emphasize this enough, that I think it's an obligation for all of us who are obviously very heavily involved in the governance of the world economy. We've all got very big responsibilities, to say that is our duty, to get back and to the process of saying, what's caused this and what do we do about it, and what do we deduce are the underlying issues and how do we address them? Because otherwise, say fragmenting the world economy is a bad outcome.
But what kind of fragmentation would it be? Is it, again, are you fearful that the world is splintering irrevocably, or is there a pool that's just moving?
Well, I think if it was a breakdown of trade in the world economy, obviously exactly how that would manifest itself would remain to be seen. But it would be running against a long period now where we've been building the resilience of trade in the world economy. We've been building openness. But as I said, I want to sort of temper that by saying, look, there are issues. I don't think we should say there are no issues. This is all made up. There are issues, and we need to address what they are and work them out. But we need to do that in the context of a commitment to a robust open world economy.
Governor Rhee, as the only governor here representing a non-reserve currency country, how concerned are you about fragmentation of the global financial system and the risk at the end of the day that the US may be less willing to provide dollar liquidity in a future financial shock?
No. But I think I mentioned that we are quite vulnerable to the fragmentation. But in reality, as a small country, it's a pity that we can raise our voice, but in reality, we cannot change the course. So we have to probably take it as an environment and to adapt to it. What matters is we talk about economic fragmentation, but for a country like us, the most serious issue is combined with security. And for that issue, let me stop here because I don't want to go further. But as for the dollar liquidity support, as demonstrated during the global financial crisis and pandemic period, the standing dollar swap lines with 5 international financial centers and the 9 ad hoc temporary swap lines for the 9 non-reserve currencies, that was crucial in restoring the stability in the global world. And if another global dollar shortage hits, I believe that the U.S. Fed will extend their swap lines again, which is very important. And but one other problem for a country like us is we know that the U.S. provide ad hoc swap lines as long as there is a global dollar shortage. But issue is what happens if there is our own problem and there is no global dollar shortage. Our understanding is that Fed cannot extend the swap lines in that case, and we have to self-defense ourselves. That is why I think that having a adequate, sufficient level of reserves is very important. And recently, thanks to the introduction of the FEMA repo facility by the Fed, actually these reserves become much more effective tool to defend ourselves.
Jay Powell, on fragmentation?
Well, I guess I'll just agree with what Chang Yang said, which is, or point out that nothing has changed relative to our swap lines. We still have the same authorities, and we're still prepared to use them in situations where it's within our legal authorities and where we think it makes sense. So that is, we're aware that that's a big contribution that we can and do and will continue to make to global financial stability.
Governor Ueda, how much do you think about fragmentation and the impact this could have on Japan?
See, on the trade side, I think a lot about what will happen to Asia, even Asia excluding China. So this will depend on the relative tariff rates imposed on the region relative to China or relative to other countries. But there's a fairly strong intra-regional trade taking place during the last decade or two. Also, there's new countries like India growing at very high speed. So I hope there's a sufficiently resilient domestic demand in the region to keep the energy of the region alive. On the financial side, I don't have much to add to what other people have said, but it would be important to keep trying a multi-layered approach to things like swap lines. We have Chenmai initiatives in Asia. Doing something similar or continuing to do something similar would be important.
Madam Lagarde, you've often spoken about the role that Europe could take in a fragmented world. How do you see that developing in what kind of time frame?
Well, I think Europe has witnessed in the last 4 years, in particular, well, since 2022 in particular, the last 3 years, major challenges to its way of doing business, to the assumptions that it has made about security, about supply, about destination. Whether you look at what the horrible Russian invasion of Ukraine has precipitated and how that has impaired the sentiment of security that we in Europe had, and the sentiment that we could, forever rely on the protection of others, that has been impaired significantly. When you look at the energy supply on which some of the European countries in particular, but most of us, have relied upon, namely access to reasonably cheap oil and gas supply from Russia, that has been impaired significantly, and we had to find the resources to respond to that. And whether you look at the business model of some countries where destination was inevitably China in the main, that has already been challenged as a result of the fragmentation that is not just a risk, but which has happened. If you combine that with the technology risk that we could all be under, either because of political determination or because of shortage of supply, whether it's on the front of microchips or rare earth, I think we are in a situation where many of the assumptions have been shaken up and where we collectively are on the cusp of, I hope, this is my hope, of better taking hold and control of our destiny by making significant structural efforts to be more independent, be more productive, be more autonomous in all these different dimensions. Is it going to happen overnight? Yet again, no, because on some of those fronts it takes time, it takes investment, it takes political determination, it takes momentum. And from a pure sort of, as president of the ECB, what we can do on the monetary front is to deliver on our mandate of providing price stability so that the fluidity of factors that is needed, both in terms of capital, in terms of labor, can rest assured that price stability will be within our remit under strict commitment to deliver on our target of 2% medium term. But yes, I think it's historically, I believe that in a few years' time, we will look at 25 of those latest 3 years as significant change in the way in which we conduct our life, our business, and develop Europe. And I hope for the better.
Jerome Powell, last year in Sintra, you said that the US cannot run these kind of deficits in good economic times for very long. And then you also said we'll have to do better sooner, something sooner or later, and sooner will be better than later. How's it going?
So, of course, I probably preface that by saying that we don't comment on fiscal policy. That is the one thing that I have said, and my predecessors have also said, and that is the U.S. federal fiscal path is not a sustainable one. The level of the debt is sustainable, but the path is not, and we need to address that sooner or later. Sooner is better than later. That's what I said last year. There's not a lot more I can say.
For everyone else, how much of a problem for the world are America's public finances? Governor Rhee?
We have to see what's going to happen. Yeah, but as I mentioned, we take it as an environment, and we just adjust our policies accordingly.
I don't comment on our fiscal policy, let alone anybody else's.
Anyone else want to take that question? Last year, Governor Ueda, you spoke 2 years ago at this ECB conference. It was your first public appearance overseas after taking the current role in April 2023, and you talked about your surprise with the tight schedule of a central governor. Are you getting used to the schedule? Is it ramping up? Is it even more than when you started?
It's still very tight.
Is it tighter than before? How are you finding yourself after more than 2 years in the job?
It's as tight as 2 years ago.
So it hasn't changed?
Getting used to it a little bit, yes.
Governor, what's your biggest task for the rest of your term until 2028?
Well, as I was saying at the outset, headline inflation is above 2. Underlying inflation is below 2. I want both to converge to 2% by the time I leave my office.
I think you were also asked what keeps you awake at night in Washington in October, and you talked about the pace of rate hikes as one thing. Is it still the same, or do you have other things that you're worrying about?
Let's see. I didn't sleep well last night. There's a reason for this. Governor Yi was sitting next to me during dinner, and he told me that espresso contains less caffeine than coffee. So I immediately had a cup of espresso.
I meant the total amount of total amount of caffeine rather than caffeine per ounce, okay?
Anyway, this is a joke, but during these international meetings, I get chances to talk to my colleagues, get a lot of useful insights. So when I go to bed, I think about those and say to myself, maybe I should adjust our economic outlook, our policy strategy in response to these nice comments. And these keep me sometimes awake, but it's a nice thing to do to keep the trust in ourselves, which is the very foundation of what we do among central bankers.
To all of you, what keeps you awake at night, given all of the uncertainties and the changing world? Madame Lagarde.
First of all, I can confirm what Kazuo just said, because it did happen on occasions that the following day, after probably a difficult night, you came to see me and said, did you really say that yesterday during the meeting? And I knew that you had been sort of ruminating and pondered what the consequences were. So it's the truth. It's not a joke. Yeah. What keeps me awake? The truth. By that I mean I'm getting more and more concerned about the role that artificial intelligence is going to play, about how distorted things can be presented, how public opinion can be manipulated, and having been a lawyer by background, where searching for the truth is one of the purposes that we hold as auxiliary of justice. I'm very concerned by what's happening at the moment and what kind of moral compass and the watchdog of the integrity of data, because we keep saying that we are data dependent, and we are, and we want to see our projections and our assessment and the analysis anchored in empirical data and understanding of what's happening in the reality of the economy. And I do have this fear that things can be distorted and that we can fall prey to that, because it's incredibly easy and actually described now in some literature. That is of great concern to me. I mean, I sleep at night, but...
Chair Powell?
So I have a little more than 10 months left on my term as chair. And all I want, and all anybody at the Fed wants, is to deliver an economy that has, price stability, maximum employment, financial stability. And what keeps me awake at night is how do we get that done? I want to hand over to my successor an economy in good shape, and so do all of my colleagues. That's all we ever want. So that's what keeps me awake at night. Is are we on a path to do that, and how do we get that done?
Do you plan to stay on as Fed governor after your chair term expires?
I have nothing for you on that today.
Governor Rhee, what keeps you up at night?
First, my apologies to Ueda-san, but to me...
Scores on the espresso will be settled.
I think one concern that I have is unique to our problem is a perception gap of the public due to very rapid structural changes. For example, a decade ago, our potential growth rate is around 3%, but now it's well below 2%. But people still think that we have to grow above 3% in normal times, and that actually expedite their demand for the more stimulus monetary policy and fiscal policy, while what we need is a structural reform. But on the other hand, if I keep on talking about structural reform, I don't know how far I can go on discussing this structural issue, because some people say that it's well above my mandate. But I think what is important for our country is not only the cyclical issue, but how to adapt to these structural changes. And that is a very difficult challenge.
Governor Bailey?
Well, I want to deliver inflation sustainably at target. As I keep saying to my colleagues, can you please stop thinking of all the shocks that we haven't had yet in my term that we might have. But today's, maybe I've been sleeping too well, because I felt I needed something else to do, because today's a significant day, because it's my first day as chair of the Financial Stability Board after taking over from Klaus's enormously distinguished leadership. And so that gives me a whole load of other vulnerabilities to think about and worry about when I haven't got anything else to do. But seriously, I mean, there obviously are issues in the financial system that we're very focused on and will be very focused on in terms of understanding the vulnerabilities of the situation we're in.
Governor Rhee, I also wanted to ask you actually about digital currencies, because the Bank of Korea put brakes on testing a central bank digital currency this week. Would you agree that it's more of a priority to find, I guess, the right regulation for the immediate challenge of stable coins than to develop a CBDC that no one may use?
That's a hot topic now in Korea. Surging in the dollar-denominated stable coins, especially recent passage of the Genius Act in the United States, make many fintech companies and the advocates of the stable coins to ask the government to allow the non-bank institutions to participate, to issue the Korean won-denominated stable coins. As you mentioned, that we have been experimenting the tokenized deposit pilots with a commercial bank in our permission network. But I think that given the surging demand for allowing non-bank financial institutions to issue stablecoins in public domain, make us a little bit, I have to talk with the government agencies because it's well beyond the Bank of Korea's mandate. From our perspective, what we are worrying about is that if we allow the unregulated won-denominated stablecoin, it will definitely expedite the exchange into dollar-denominated coins and undermine our capital flow management regulation. We don't know whether the critic says that the new technology in blockchain can identify the irregular transactions, do the know your customer rule kind of regulation very well, and then even identify the irregular, strange transaction very easily. But we're not so sure whether this is true. And also there's a narrow banking issue, many other issues. So I think I have to talk to the government authorities how to handle this kind of regulations.
Andrew Bailey?
Yeah, I mean, it's an important subject. It's one of the subjects that we will have on the agenda for the FSB, no question about that. You see, the thing that I think is about stablecoins is that, and here I distinguish them from something like Bitcoin, is that they purport to be money. They purport to have the medium of exchange, function of money. And therefore, they do have to meet the test of money. We've talked a lot about this. We've talked a lot about trust in money, about the so-called singleness of money, which is really all about them being assured to hold their nominal value. And for me, this is going to be the critical test as to what structure and design comes out of all this work that meets that critical test. Because if they don't, then I don't think we can be content with them. And if they're purporting to be money but don't actually meet the test of money.
Christine Lagarde?
I have a relatively strong view on that point, if you don't mind, because I think that we are falling prey to some confusion between money, means of payment, and payment infrastructure. And that is accelerated or emphasized as a result of the technology that are being used, and some technologies in particular. And I regard money as a public good, and ourselves as the public servants in charge of securing and protecting that public good. My fear is that blurring of the lines that I mentioned earlier are likely to lead to a privatization of money. And I don't think that this is the purpose for which we've been appointed to do the job that we have, nor is it good for this public good that is money. I think it risks undermining our capacity to conduct monetary policy, and I think it's risk weakening the sovereignty of those countries or those regions which inadvertently become subject of the use of that means of payment infrastructure / alleged money, and we should not only just consider it, but determine what our policy should be about it, if we mean what we say and we protect what we have to protect. Thank you.
Chair Powell, I actually have a question. Do you fully support the recent proposal driven by the Vice Chair for Supervision, Michelle Bowman, on rolling back capital rules? Would that actually meaningfully improve liquidity in the Treasury market?
I do fully support what we, in fact, voted for, what we're put out for comment, which is sort of putting the leverage ratio back where it should be, which is a backstop to risk-based capital. And so yes to that question. Let me say on stable coins, if I can.
Yep.
I do share the concerns that you hear here, but I also think it's a positive step that we don't have a regulatory framework for these now in the United States. We tried very hard in the last Congress to work with people on both sides of the aisle to create such a thing. Now it looks like we're well on the way to creating a framework, which I think is something we need. If we're going to have stable coins, and apparently we need to have a federal and state level regulatory framework, which I think we're making progress towards having.
We only have a couple of minutes left, and so many of you have plenty of time left in office. Others will leave sooner. Knowing what you know today, Governor Ueda, if you already had to offer some advice to your successor, whoever that may be, what would it be?
I don't know. If I finish in 2.5 years or so, maybe, as I said, inflation would be at 2%, but I will not have finished reducing our balance sheets to appropriate levels. So I would say to my successor, take great care in proceeding with further reduction of the balance sheet, size of the balance sheet.
I like that. Christine Lagarde?
I don't think I would say anything because I remember my predecessor telling me that it would be a walk in the park. So I'd say nothing. But I would share the ambition of Jay Powell. I would want to hand over, job as well done as possible and results achieved as much as possible.
So quickly, we're trying to deliver macro stability, financial stability, economic stability for the benefit of all of the people. If we're going to do that successfully, we need to do it in a completely non-political way, which means we don't take sides, we don't play one side against the other, we stay out of issues that are really not our bailiwick, and we just focus on those things. Really, we're trying to have it be so that the public lives their best economic lives, and so elected policymakers can make the really important decisions in a stable environment. And so that's how I think about it.
Governor Rhee?
I can say something, but I don't know whether my successor will take it seriously. But given that I mentioned structural issues, I hope that the Bank of Korea continue to raise voice outside of just monetary policy for general economic issues.
And Governor Bailey?
Be humble. So we're exercising real power. Many people think we are not humble. Be humble. And I'll say this, if you want an illustration of this, Christine and I were both in Ukraine the week before last. If we think we have it difficult, spend time with the Central Bank of Ukraine. Nothing.
Yeah. Thank you so much to everyone for a wonderful panel. Thank you.
Okay, chat. So that is it. The NASDAQ is down pretty significantly. You can see gold on the right side here, and the NASDAQ is down big. Remember, guys, tomorrow we have more economic data. We're still kind of waiting news on the big, beautiful bill updates. They were waiting on the final Senate vote not that long ago, about 10 minutes ago. But it's been a marathon voting session for the president's domestic policy bill. Thune indicated the Senate's marathon voting could wrap up at some point sooner or later, telling reporters we're close, but with no final vote scheduled. 11 minutes ago, they said Senate GOP to vote soon as the president's bill, as Thune confirms deal with holdouts. He said there will be one amendment vote, or Hovind said there'll be one amendment vote, and then there will be 3 votes that actually go to adopting the substitute and passage. We'll need him on the actual substitute bill. And so we'll see if this gets done today. We'll see. We're still waiting. I'm still kind of trying to follow these updates here in different places. But we're still looking at it now. Yeah, so Senate Majority Leader Thune said his chamber will soon vote on the passage of the tax and spending bill. And so we'll see what happens, but that's the news to watch for right now. It really is. Also, guys, if you haven't already, check out TopStep. If you want to learn to day trade, do not fund your own account thousands of dollars. It makes no sense. No PDT rule in futures, so it gets you around the PDT rule, and you just have to put up less. There's no PDT. TopStep gives you a 50K demo. They test your skill with a demo account. If you pass the test, they fund you 50K, 90% split. You get to keep your first 10K in profit, and if you fail the challenge, you lose 50 bucks. So it's lose 50 bucks for new traders versus losing tens of thousands of dollars a lot of the time. This way makes sense. And in the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. It's just a good way to learn in a structured environment with more limited risk than putting up 5, 10, 20, 30 grand of your own money. And they pay out hundreds of millions. They fund thousands. Beautiful way. And if you use my link, TopStepX, you get 0 commission as well. Look at the NASDAQ still break it down. They're an affiliate of mine, so I'm biased because I get paid by them. And so I'm always pretty honest with people about it. Like, I'm biased. I get paid by them. But it's genuinely really useful and a good way to learn how to day trade when most day traders lose money, to be honest. So it's genuinely a pretty solid way to learn how to day trade when most day traders lose. Here's the link if you want to check it out. Again, I'm biased. Understand, I'm not an investment professional. I'm not liable if you lose. You know, I get paid by them, so I'm biased. But there's the link. Look at the NASDAQ flush down here. And I'm wondering if this has to do with the bill news, like bill updates potentially, or whether the market's just flushing down now that Powell's done speaking with the ECB here. So we're trying to track this news. So here. Yeah, so Powell's done speaking. He said we should stay out of political issues. Anything about the Fed or continuing as a Fed governor. But he did say the debt path was not sustainable, will have to be addressed sooner or later, and some other stuff. But I'd be watching for breaking news on this bill because I think that's one of the big things you probably want to pay attention to. Yeah, I'm not saying I want it to pass or don't want it to pass. You know, I'm just covering the breaking news here, to be honest. I'm politically neutral. I'm not going to comment on that. So AstraZeneca CEO wants to move to... He's spoken privately of a preference to move the FT 100 listing to the U.S. according to the Times, citing sources. Yeah, and I might take a little trade here, but I got to wait for the market to break down. We're pretty green on the day. We got a cushion. I'm just trying to cover. And again, so one thing that we did see, you know, we did the breaking news report. Jolts came out higher than expected at 7.77 million. Expected 7.3. ISM manufacturing PMI showed up at... What did it show up as? Hold on. I know I have this. I posted it. And you can catch all these breaking news at Beginner Trades on X. But Jolts showed up at 7.77. ISM showed up at 49. Slightly higher than expected. But both of them stronger than expected. If we take a look at rate odds, like this is something we looked at earlier. If we take a look at rate decisions here. So the likelihood of a June... Wait, did this go back up? Okay, so this actually increased again. So this a couple minutes ago was back down at like 17 or 18 after Jolts. It moved all the way back up to over 20% again. So there's still a 20% of a cut in July. I'm not saying I agree with it, but there's a 20% chance in July. Time. It could change. And so we'll see. But I think I'm just going to get out of here, guys. I appreciate the love. Thanks so much. Oh, all good. Yeah, I don't know. I'm just kind of responding, all brother. I don't know if the Jolts is strong enough. What I will say is that if Jolts is relatively small potatoes, right? What we do want to pay attention to is the payroll report on Thursday. Non-farm payrolls, unemployment dropped Thursday. If payrolls show incredibly strong data followed with low unemployment, that's going to push back rate cut odds. If payrolls show up super weak and unemployment ticks up or something like that, that's a situation in which we might have increased odds of a July cut. So that's what it is. Hey, I appreciate you guys joining me today. Thanks so much for the stream. And yeah, again, if you want to check out TopStep, great way to help support your boy here on this channel. No PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell. Most day traders lose money, so you might want to limit your risk instead of funding your own account at the beginning. I think that makes a lot of sense. Check out Top Step. Link is in the chat. I'll see you guys later. Y'all be good. Have a great day. Remember, tomorrow we have, this is what we got for the rest of the week, chat. We have ADP non-farm employment change tomorrow. This is the prelim payroll numbers for Friday. So Wednesday, 8:30 or 8:15 tomorrow, prelim payroll numbers. Thursday, we got a whole bunch of stuff. We got jobless claims, unemployment, non-farm payrolls, trade deficit data, factory orders, ISM services PMI, Raphael Bostic speaking, and services PMI for June as well. So a lot of stuff coming out on Thursday. We have some stuff tomorrow, and then we got breaking news. So just stick around. We'll be here bright and early. Again, hit the subscribe button if you haven't already, chat. We appreciate it. Thanks so much. We cover all this stuff as soon as it drops. So, yeah, thanks so much, guys. John, thank you very much for reporting the important news. All good, brother. All good. I got you guys. Again, tune in. I'll see you guys later. Y'all be good. Have a great day.